And that is interesting because they're saying it undervalues the business. It would, of course, create something to rival Santander. Could BBVA be tempted to come back? The shares have been reacting, of course, to the start of that story.
We've also had UniCredit numbers out this morning. Let's not forget that as well, what is happening in Italy. European markets are about to open. Remember, London was closed yesterday, and as a result of which, we are potentially going to see a little bit of a catch-up trade coming through in terms of the overall performance. So look out for that one in terms of the anomaly that is likely to come through as a result of what is happening with the FTSE 100. It's already up, Tom, by 0.3%. Yesterday, a reasonably positive performance for the rest of Europe on the back of the payrolls number we saw Friday driving US trade.
Yeah, indeed. Currently seeing gains of 0.9, almost a full percentage point, as had been flagged by the futures for the FTSE 100 so far in the trade, adding 82 points. That catch-up, of course, that Guy has been flagging for us. Just with the context of what happened, of course, on Wall Street, you saw gains of more than 1% for the Nasdaq 100, gains of more than 1% for the S&P, and it was the big tech names back in the lead, the likes of Tesla and Nvidia. The Nasdaq, by the way, up 4% now since the start of the month. Is that going to be sustained? The earnings story, particularly around Mag 7, came through, seemed to be reinforced, at least for most of those. FTSE 100 now up 1%. Over in France, the CAC Cron gaining 38 points, up 0.4%. And in Anna's part of the world, at least temporarily, the DAX gaining 0.3%. Across the sectors, the breakdown that you're seeing there, Guy.
Absolutely. Anna mentioning what was happening with Sabadell. That stock is down by 3.5% at this point. I'm waiting for a price on UBS, which I haven't seen yet, and we'll continue to monitor what is happening with that stock. Came in on the back of some fairly decent move yesterday into the numbers. We'll see how it trades throughout the rest of the day. In terms of the sector story, let's just get you a little bit of a breakdown in terms of what is happening there, in terms of the wider moves. What we're seeing here is, so far, and this could change obviously as UBS opens, travel and leisure is outperforming. Retail is having a fairly good morning. The only sector in negative territory thus far, we're talking a lot about Aramco here, but is the energy sector. It is down by 0.1%. There's only two sectors in negative territory. I'm going to call it one sector, and it's only just.
And on the soggy results coming through from BP, that company currently down 0.5%. They reiterated they can come through with that 1.75 billion buyback, but again, it was a miss on the top line for BP. So taking a little bit of pressure on the back of those earnings. Infineon, we're not getting the pricing yet, but UniCredit is a company that, of course, Guy flagged as well. Solid gains so far for that Italian lender, which came through with a beat as well, with a focus on the net interest income, coming through with gains currently at 2.5% on the back of those earnings for UniCredit.
Let's talk about what's happening with UBS in a little bit more detail, maybe as we wait for the stock to open and give us a sense of how investors are reacting to the news this morning. By and large, a beat. So wealth did better. The investment banking division looks like it's performing okay. If Emotti talks about this year as being the pivotal year, Q1 so far looks like kind of a tick in the box.
And on the beat, I mean, the net income almost triple the estimates, the net income. And as you say, the investment banking part coming back. This stock is up, as Joe was outlining for us, what, 41, 42% over that period, with that 12-month period, of course, since the takeover of Credit Suisse. I guess the question is, how much more upside is there, given the uncertainty about the question around capital requirements? And again, the team in Zurich telling us that detail is unlikely to come through until the end of this year, maybe the first part of 2025.
So that's going to be a big overhang throughout the rest of this year. So I guess in some ways, Sergio Motti's going to kind of park that. I know Colm Keller has been talking about it, but in some ways, he's got an operational story that he's got to deal with this year, and that's what he's got to get to grips with now. The nuts and the bolts of making these two banks fit together and work together. And I think that's the kind of the critical factor that we now need to look at. In terms of the investment banking division, it is going to be critical. It is going to have, there's probably a lot more work, sort of moving parts here in terms of the challenge of getting these two businesses together. So how is it performing thus far? Well, this is what Sergio Motti told Francine a few minutes ago.
Actually, it's a good momentum. You may remember in the fourth quarter, we also had a very strong performance in banking. As we integrate the new colleagues from Credit Suisse on our platform, we start to see the pipeline developing. We are able to execute. And so it's very much aligned with our expectations of improving the mix between our markets business and our banking business in the investment bank.
That was, of course, the UBS CEO, Sergio Motti, speaking to Francine Lacqua in Zurich a little while ago as we unveiled the numbers that we've been digesting so far this morning. Francine joins us again now. Fran, let's talk about this integration challenge. I know later on we're going to hear more about this issue with the regulatory capital structure, but let's focus now on kind of Sergio Motti's challenge that he can deal with, and that is integrating these two institutions. He was talking there about the IBAG. What sense did you get about the progress that is being made and whether he's happy with that progress?
Well, Guy, good morning. He is absolutely happy with the progress, but I think there are a lot of questions on overhangs, even how the integration from now continues. So we know about cost savings. He talked about $1.3 billion in cost savings. Of course, in the second quarter, that's the integration cost. He's expecting actually the cost savings to be about $1.5 billion by the end of 2024. So there is also things that they probably still need to unwind. So it was so important that the investment bank not only did a beat at his global wealth, but going forward, there are a number of questions that we need to ask. So first of all, if you look at the non-core division, something that was quite striking was, this securitized products deal with Apollo. Is that exceptional? Is there more things like that going on? Are there things where they actually have to take a loss on? And so that's unclear as they work their way around. He did say 2024 is a pivotal year. I tried to pin him down on whether a pivotal year meant a difficult year. He also talked about things, of course, out of their control. So this is volatility. It's what's happening with interest rates. It's possible geopolitical situations that he talked about. But he did, of course, also mention the capital rules by the Swiss government. He was very careful not to talk about them too much. But again, we don't really know when they'll have a final number and whether shareholders will try and figure out whether 20 billion means also reshuffling of UBS assets.
Francine, we've seen the Swiss National Bank move on rates. Of course, this is a global business, and so they're very exposed to the global story around rates. Did he have much to add on that front?
Well, he called, I think, 3 cuts by the Fed and actually 1 or 2 more cuts by the S&B. Now, this means that their net interest income will probably, change in the coming futures. But I think that the bigger question, so this is a readjustment internally on, I know also, for example, their FIC trading maybe wasn't as strong as some of the other ones, but they rely on it also a lot less, certainly, than the Wall Street Titans. What I think is the big question, which I know he's just jumping on a call with analysts, is really what the Swiss authorities are asking of UBS. So they put out this paper talking about large systemic banks in Switzerland. Well, sure, that's UBS. And so they want to make sure that there's not a repeat of Credit Suisse. When I asked Sergio Motti, he was very diplomatic, saying, look, they all want the same thing and they need to make sure that they have the right capital rules in place. But if you're trying, again, you're growing the company, so you have to put more money to one side because of that, because you're integrating Credit Suisse. And then if the rules of the game change and they haven't been consulted, again, that could be something that makes shareholders worried. But I'm looking at the share price now. So that's over 2 days. It's gaining 7%. So they're not too worried about it now. Maybe it's a question for the next quarter or even towards the end of the year.
Yeah, as you say, not much angst from investors at this point. They're cheering at these results coming through from UBS. Bloomberg's Francine Lacqua, of course, on the ground in Zurich following that interview with the CEO of UBS, Sergio Motti. And the gains are pretty pronounced over that 2-day period, Guy.
7% in 2 days. These big stocks are so whippy at the moment. A 7% move for UBS over 2 days, I think, is quite extraordinary. The stock has been selling off recent highs, so it hit those recent highs sort of beginning of April. It's sold off since then. I think the capital worries have been there and maybe behind that. But a 7% move over 2 days, I think it's extraordinary. And some of these big tech stocks are moving these kinds of amounts as well. Extraordinary to see. Two days up 7%.
It kind of ties back to the conversation we had with Joe Little about the deep uncertainty on the data, because that has the read across as well for these individual stocks. Whether it is the interest rate environment that Francine was discussing with Sergio Motti, the question marks about regulation, the question marks that you detailed around the nuts and bolts of integration. There's so much uncertainty, but you're right, it's pretty pronounced in terms of the moves that we're seeing on these mega cap names.
Absolutely. I think the bit around kind of the integration is more understandable, and I think that's the bit, that's risk. You can price that risk. The uncertainty in UBS is what happens with the regulator. We just simply do not know that at the moment. So you're getting these kind of two forces that are pulling the stock and generating really big moves.
Okay, we're going to go to the energy story now, because BP, a less dramatic move on that stock compared to what we're seeing on UBS. It's currently just down a shy of 0.1%. The energy giant maintaining the pace of share buybacks. That's even as first quarter profit fell by more than expected amid lower natural gas prices. As you can see, 510 currently on BP. Let's get more then from Bloomberg's Will Kennedy in terms of the detail. Will, what kind of key takeaways for you? There's a clear divide now, it seems, between the prospects for Shell and the prospects for BP. Or am I over-reading these results? Where do you think BP stands on the back of these numbers?
The results of the two companies contrasted quite a lot this quarter, Tom. BP had what's frankly a pretty weak quarter, especially when set against Shell. Shell exceeded all its expectations, but BP had weaker than expected earnings, weaker than expected cash flow. And to maintain the pace of buybacks for shareholders, it had to borrow quite a lot of money. Net debt jumped by more than $3 billion. Now, the CFO was keen to point out that some of that was accounted by a jump in working capital, and she expects that debt increase to unwind by the end of the third quarter. But I think there's a real contrast with the performance of Shell, and you can see that in the price reaction today. BP down a little bit, but the wider market is quite strong, and Shell is up by more than 1%.
Yeah, really interesting, Will, that we have this weakness in BP, even though we get now, typically from these big oil majors, we get these updates which come between the earnings reports, we get their sort of trading. So there's quite a lot of this that we knew already, and still the negative surprise.
Yes, that's right. I do think that shareholders will take some solace, though, Anna, from the fact that the CFO pointed out they reiterated their guidance on share buybacks. They are currently buying back $1.75 billion of stock every quarter. And she said on average she expects that rate to continue until the end of next year. So investors will feel some reassurance that she was willing to reiterate that. But I don't think BP can afford many quarters like this before investors start to wonder whether they can afford this level of returns. Bear in mind, this weak quarter and this rise in debt happened at a time when Brent was averaging, by historic standards, a very healthy more than $80 a barrel. So, you know, what happens if we saw slightly weaker prices? I think that these are a challenging set of results from BP.
BP just beginning to flip positive now. We'll get an update on that in just a second. Will, thanks very much indeed for joining us, running us through the numbers. BP and Aramco both on deck this morning. Let's take a look at the core six that we watch across Europe, just get a sense of what is happening here. These are the big stocks that we need to pay attention to. We'll get B. Artamanthi's take on all of these in just a moment as well. But as you can see, a broadly positive picture. Novo up by 1.7% today. It's certainly leading those gains. Let's get back to BP. Let's get back to what's happening with the chip sector as well. Joe Easton joins us with details.
So we will start with these chips because it's quite a surprising move in one way. We've got Infineon up 6%. They have downgraded their guidance related to the auto space. It is one of Europe's biggest chip makers, seeing a decline in auto chips, but the stock up 6%. They have warned on profit a couple of times over the past 6 months, so it could have been worse, is the feeling we're getting from the market moves at the moment. And actually, ST Micro, Nordic Semi, Soitec, all of the peers also gaining as well. So potentially this weakness is just priced into the market. So Infineon gaining and lifting the sector even after slashing its margin outlook and its revenue outlook once again for that stock. Then in terms of the banks, UBS, it's all about UBS today. We are getting a gain in that stock. It's the first profit in several periods for them, up 6%, still going even higher now. Those capital concerns over in Switzerland are still a negative on the stock, but the market is pretty much ignoring that today, and we're up 6%. UniCredit, this is doing well in the investment banking and fees, similar to UBS as well, so that one's gaining almost 3%. Banco Monte Paschi, that one looked pretty strong to me, but it is declining. It's had a decent run this year. Again, not bad numbers in the investment banking business, so those Italian lenders going the opposite direction. You mentioned Banco Sabadell down in sunny Alicante. It is down 2%, rejecting the bid from BBVA, Bebe Ubia, if I can show off my Spanish skills there, but that stock is declining 2% today. We'll see if they come back into the market for that one. In terms of a couple of healthcare earnings, for Fresenius Medical, that one getting slammed along with Healthineers, both of those reporting some weak sales today, both listed in Germany. Siemens, of course, the spin out from the Siemens AG firm Healthineers, has had a few warnings out of that one as well. And Coloplast over in Denmark, this is advanced wound care and medical equipment. That one hit as well. Weakness across the healthcare sector this morning. You mentioned BP with Will, seeing that one gaining 0.7%. Has been tracking the oil price higher recently, but TeamViewer, the Man United team sponsor, the shirt sponsor, Man United hammered last night, and TeamViewer hammered on the market today, down almost 6% for them. Weak sales. It is communications and tech for working from home, a big pandemic winner. Finally, down the bottom there, we've got Zalando. Now, this one is, of course, the retailer, bit of an ASOS rival over in Germany. Strong sales out of them. Finally, we'll finish on cognac following the bank holiday. Maybe some cognac drunk over the weekend, but there was some positive updates on Rémy Cointreau and Pernod Ricard. We're seeing reports that the Chinese will not impose tariffs on them. We haven't got the prices on them, but Rémy and both Pernod were higher today in France. Keep an eye on those ones on the Paris Exchange.
Okay, Joe Easton from our equity team, thank you very much indeed. Plenty more ahead. We're going to be speaking to Beata Mante, Citigroup's head of European equity strategy, get her views on how to position in these markets. She's constructive on Europe and Japan. This is Bloomberg.
Welcome to the world of decentralized finance.
With the surge in Bitcoin, you have crypto stocks also surging.
Bloomberg's covering all things crypto, the people.
This is a political attack, and we must hold our elected officials accountable.
The transactions.
Really a record-breaking moment.
Bitcoin is the exit strategy.
And the technology.
Awareness is going to grow, and these things grow the overall industry.
Crypto as an asset class is here to stay.
Bloomberg Crypto, only on Bloomberg.
This is Bloomberg.
Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything.
This is Bloomberg News Now.
News when you want it at the touch of a button.
Another volatile day on Wall Street. We're seeing big moves.
All eyes on Capitol Hill as Democrats and Republicans prepare.
Today's job numbers casting doubt on the Fed's next move. Inflation remains front and center. And that's news when you want it with Bloomberg News Now. Get it 24/7 on the Bloomberg Business app, Bloomberg.com, and anywhere you get your podcasts.
Bloomberg News Now. Context changes everything.
Always on the heartbeat of the tech sector.
Spread across global markets.
The real-time data aspect is going to be important.
We're going to bring you expert analysis on that. Sure.
Don't miss Bloomberg's interview with the
Certainly, the valuations are quite high on many of the metrics. Technology is a very high percentage in terms of valuation, but there's a potential for a win for equities here in the near term, because if growth is stronger, equity valuations benefit, and if rates come down, equity valuations benefit. So there's this opportunity for a potential win-win here.
Equities win. That was, of course, Citi's CEO, Jane Fraser, speaking at the Milken Institute Global Conference taking place on the West Coast. We'll get more from that a little bit later. Let's pick up on that conversation. Beata Manthi joins us now, Head of European Equity Strategy at Citi. We can hear from Jane, then we'll get to hear from you. This is a fantastic morning. I want to start with whippy stocks. And I want to start with how much stocks are moving around. Jane kind of lays out the case for equities. But equities are all individual equities are moving a huge amount. UBS is the example this morning, but you look at tech last week, huge amounts, like single stocks that are worth trillions of dollars moving around 6, 7, 8, 9%. What does that tell you about investors' understanding of how to value these businesses?
What it tells me that it is all about earnings. So what Jane has described, this environment of growth not rolling over as much as we feared and potentially cuts coming in, there is upside for earnings going forward. And what we are noticing in this reporting season is the market is really focused on the delivery. So the companies get awarded much more in the previous quarters for the beats, and they get punished much more than in the previous quarters for the misses. And of course, there is a difference between the different individual regions.
Yeah.
So I would put it this way: the U.S. market is priced for perfection, which means the corporates there need to deliver more, while in Europe, it was priced for recession a few quarters ago, and now our model suggests it's fairly priced. So delivery in line with the analyst forecast, it's enough to satisfy the market, and we are seeing it on individual stock basis.
We are struggling to understand what is happening with the global economy. How much harder does that make your job right now? I don't know whether inflation's going to be going up, going down, whether the Fed's going to be hiking or not, what the ECB is going to be. There are so many unknowns right now. How does that affect your models?
So it's been a very complicated cycle, if you can even call it a cycle, right? Because you could argue different regions are at different points in the cycle. So in Europe, at least, what you can argue that we are experiencing here early cycle dynamics. So growth was very low, borderline recession. European EPS actually was in a recession if you excluded the EPS strength out of banks, right? So we are moving higher on the GDP, on the EPS from low levels, positive delta. Then in the US, of course, it's the deltas might be negative going forward because we worry the strong growth that we've been noticing out of the US could be rolling over. And now the question is how much is going to roll over? That's the big question for equities, right?
Beata, good morning. So if US tech was the big story of, well, it seems like forever, but certainly the last 6 months, and it remains so, what is the big equity story of the next 6 months?
So for us, it's equity broadening. If EPS indeed continues to do well, you broaden into cyclicals. So it's not only about value, it's not only about growth, but being in the right sectors within the cyclicals. So out of growth, our preferred way of playing is tech indeed. We also like luxury goods in Europe, and within value is basic resources.
Okay, so those are the areas of focus. What about the tensions that we see between Europe and China right now in a whole host of different sectors? We've had slightly better news on the drinks sector overnight maybe, but certainly there are areas of tension around cars, EVs, areas of renewables, medical equipment, medical devices. In so many areas of innovation, it seems hard to say where the benefits are going to fall, who's going to reap the rewards. How do you invest around that with that kind of uncertainty, Beata?
Absolutely. So that's an ongoing process. This geopolitical uncertainty is going to stay with us for some time. And trade tensions is something that we worry about a lot. And I've mentioned we are pro-cyclical, but one part of the European equities that we are not so bullish about, we are indeed underweight, is the auto sector.
So you're underweight the auto sector, and part of that is the China challenge. Part of that is the competitive nature of that dynamic. You're seeing the slowdown in demand for EVs, and we've been having discussions with executives on that front. Where else is positioning looking a little overextended to you?
So back a month or two ago, all European equity market has been quite extended, except from FTSE, right? Now, this positioning has now unwound to more neutral-ish levels, but one bit that is still quite extended is the European banks.
Okay, European banks, as we focus on UniCredit and UBS and the upside that's coming through for their stocks today on the beats that come through on the earnings front. On the FTSE 100, this is a question we put to you during the break, but how much further does it have to run? How convinced are you that this is now, that 2024 is the year of the FTSE 100 where it can really get that sustained momentum?
So FTSE 100 has been one of the biggest underperformers until very recently, since October rally end of October rally has started, right? And the market is really focusing on commodities right now. This is where the biggest exposure of FTSE comes from relative to other markets. So value rally, where we worry about FTSE is, of course, the 50% exposure into defensive. So if you are pro-cyclical, this could be a drag. So FTSE 100 right now is on our year-end targets.
Fresh records for the FTSE 100 this morning, so we're just going to flag that. That's continuing to come through. The Bank of England is going to be meeting later on this week, so we're going to potentially hear about rate cuts. You never know. Maybe we'll hear about rate cuts. The ECB feels like it's minded as well, maybe to deliver rate cuts as well. Do you buy Europe over the United States if European central banks are cutting rates before US central banks? Is that a reason to buy Europe, or is it a reason not to buy Europe? Because in theory, maybe actually the dollar strengthens in that kind of environment, and I want to buy dollar earners rather than euro and pound earners.
Absolutely. On a relative basis, our view is that you buy continental Europe versus the US, and cut will help, right? So European equities are quite international. 50% comes from abroad, a quarter comes from the US, to your dollar earners point, and 50% of revenues comes from Europe as well. So the upside in the European growth, economic growth, is important, and of course cuts will help out.
Beata, thanks so much. Thanks for joining us. Beata Manthi, Head of European Equity Strategy at Citigroup, giving us her thoughts on the European investment climate in particular. Interesting reflections there on the ECB versus the Fed and what that does to stocks strategy. Coming up on the programme, we'll talk about European and Chinese relations a little bit more. With Xi Jinping visiting Europe, we talk China-EU ties with Ju Min from the China Centre for International Economic Exchanges, formerly of the IMF and of the PBOC. We're both here in Berlin for a development conference, the Global Solutions Development Summit, so we'll touch on some of those things. But we'll crucially talk about the Chinese economy and Xi's visit to Europe, all of these things worthy of our time this morning. That conversation coming up shortly. This is Bloomberg.
Names in tech are on Bloomberg.
There's a natural tension between the need of a supplier to scale and the need of the customer, the car maker, to differentiate, try to make something that is unique.
We have a long-term partnership with Tesla, and it's still strong, but Tesla is not the only partner that we're seeking, and we want to diversify and really make the EV market in general stronger and sustainable.
All these devices becoming smart devices, they all need a brain inside that helps them learn what to do. That brain inside is ARM.
I'm believing the next user experience is going to to be based on Gen AI on their phones. We're optimistic that we could start to see devices as early as this year.
Our job is to provide great index products and then to be the listing exchange for those index products that allow investors to invest in all sorts of tradable instruments, including now Bitcoin.
Nobody covers technology like Bloomberg. Context changes everything.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Good morning. This is Bloomberg Surveillance.
This is Bloomberg Daybreak Europe.
You're watching the China Show. This is Bloomberg Technology.
This is the countdown to the close.
Welcome to Balance of Power. This is Bloomberg.
We agree on the vast majority of what has been proposed. We already commented and highlighted the necessity of creating clarity. I think that at this stage, what we stay focused on is on executing on our strategy. We were not really consulted in this process, so it's also very difficult for us to comment certain aspects of those proposals. What we know is that we need indeed to absorb a lot of the capital requirements that are necessary to capitalize the new bank as a consequence of the acquisition of Credit Suisse.
Sergio Motti talking to Francine Lacroix a few minutes ago, addressing there, Tom, the kind of the elephant in the room that investors can't get their arms around. He can't get his arms around. He doesn't know what's happening here. This is this idea that the Swiss authorities may require extra capital requirements for systemically important institutions, i.e., he's now the only one. UBS is the only one in Switzerland. It's interesting. This could be up to $20 billion. We don't know what the number is. Sergio's talking about the fact we don't know how to we can't really speculate on this. Like, who knows what's going to happen? It'll be the end of the year. He is, though, indicating that actually, as a result of the acquisition of Credit Suisse, though, he's probably going to have to. He probably will see his capital buffers increase quite significantly anyway. So do these two things align?
And what we heard from the chairman a couple of weeks ago was the question mark, look, I mean, clearly this is a systemic bank for Switzerland. There's very few people who can poke a hole in that. But it's how you address that systemic risk potentially associated with the bank that is so large. And the chair, of course, of UBS suggesting that there are better methods of doing that, and just increasing capital requirements is not necessarily the most effective way. But as you say, UBS saying that they have about 9 billion in extra capital, 9 billion extra capital due to the impact of absorbing Credit Suisse and aligning with its capital treatment, and about 10 billion due to the full phase-in of the Basel III regulations. That coming through from Motti, the CEO, in a call with analysts.
My maths is pretty bad, but that adds up to something pretty close to 20 billion, doesn't it?
You're good, yeah, you're spot on. 19 billion, there you go. But again, there's some uncertainty. We expect to get more clarity maybe at the end of this year.
We don't know how the regulators are going to treat all of this, basically, and nor is he. So basically, so just saying, you know what, I can't deal with this right now. Maybe I'll leave that to Cole. Maybe I'll actually focus on the execution side of getting these two banks back together and get them in good shape. Let's turn attention to what is happening elsewhere in Europe this morning. The Chinese President Xi Jinping has called on France to help fend off what he called a, quote, new Cold War. Xi is on his first visit to Europe in 5 years. The aim very much of resetting ties with the European Union. Let's find out how that's going so far. We're joined now from Paris by Bloomberg's Caroline Conan. Caroline, in terms of the progress that we're seeing here, Olaf Scholz, when he went to China a few weeks ago, very circumspect in terms of how positive he was being. What has the relationship been like between the French and the Chinese?
it's a little different from Olaf Scholz, because remember Olaf Scholz was criticizing China's overcapacity, something that the EU Commission President Ursula von der Leyen, who was taking part yesterday in Paris in a trilateral meeting with Xi, also repeated, saying the world cannot absorb the surplus of production from China. But again, really, the President Xi repeated that China does not have an overcapacity issue, and that the EU should be careful not to align too much with the United States, trying to distance itself from the United States, who also, with Janet Yellen, talked about this overcapacity issue in the past. So there was a lot of frictions about the trade issues. Macron tried to be much more pragmatic than von der Leyen, saying that the EU trade policy remained independent, trying to distance himself from the US. So perhaps giving President Xi a more attentive ear, a more receptive tone in terms of what China is trying to do, which is to avoid more tariffs, to avoid any restriction of access to the European market for their Chinese EVs, for example. In fact, Macron didn't have any major business deals signed with China. Yesterday, only a few cooperation agreements, including in the aviation sector, but he did have a small victory on the cognac front. He said in the press conference last night he was hopeful that China would lift their measures against the cognac makers. In fact, he even gave President Xi as gifts some cognac from Hennessy and from Rémy Cointreau. And today he's taking President Xi to the Pyrenees Mountains in the southwest of France, perhaps a way to appease the frictions on the trade side from yesterday.
Thank you very much. Yes, I noted how he gave those two bottles. He didn't want to pick between those brands, which was quite nice. Caroline Conan joining us there from Paris with the latest on Xi's visit to Europe. Joining me in conversation here in Berlin, Zhu Min, Vice Chairman of the China Center for International Economic Exchanges, formerly, of course, with significant roles at the IMF and the PBOC. Very nice to have you with me, Zhu Min. Thanks for joining us in studio. We've got a lot to discuss. You're here, I'm here in Berlin for the Global Solutions Development Conference. Yes. President Xi is in Europe, just as you're in Europe. But let's focus first on the Chinese economy, because this is an area where we seek your expertise, I suppose. When and by how much do you think that China should cut rates? There's been talk from the Politburo recently about monetary and fiscal policy playing more of a role.
I think China have more instruments in addition to cut rates per se, because we don't want to have overflowing monetary policy. This is a key issue. We emphasize more on the structure reform because Chinese economy moving away from traditional infrastructure investments, the real estate sector, and export into the domestic consumption, into the digitalized manufacturing, and to green transformation. So sectorial become more important. So we emphasize a more structured monetary policy rather than broad, easy monetary policy.
So if investors are looking for rate cuts, do you think that expectation is misguided?
Yeah, I think there's still room to cut the reserve rates, yeah. But from the real rate cut, I think this is still the last thing we need to do.
Okay, so they have a whole load of different policy tools, as you point out, and maybe that helps with my next question. I wonder if the PBOC can reconcile the maybe conflicting directives they're being given by top leaders, being told to use monetary policy, but at the same time being told to stabilize the exchange rate. Is it possible to have looser monetary policy and stabilize the yuan at the same time?
Yeah, the losing monetary policy in the sense is more structure. So we do more structured monetary policy, for example, on the technology advancements, on the green transformations, on all the others, not necessarily in general cut interest rates, so not necessarily impact on exchange rates as well. And the Chinese exchanges more today on market-based reflect the market change. So I think that's the key issue.
So you don't see there's any conflict there. Can I ask you about the housing sector? You've mentioned some of the structural issues and reforms. Real estate is one of those. We heard from the Politburo recently saying that measures will be taken to digest the housing stock. What do you think is meant by that?
No, obviously it's oversupply in housing market, right? And 5 years ago, it's a 1.7 billion square meter supplies in Chinese market. Last year is only 1.2 billion square meter demand. So you can see the gap is 500 million square. It's a huge, right? But 40 years of strong growth is overcapacity. It's very clear. And with the peak of the populations, right, with demographic change, demand obviously is awakening now. There are a lot of policy in place, provide liquidity to the real estate company, let them to complete ongoing housing. I think this is very important. Relax all the constraints on demand side. It's rather funny because the real estate price increased so much every year. So a lot of constraints on there. So we'll let these things relax, let people to buy the housing. This is also important. And transform some housing into the rental sector. China don't have a long-term renting market, which is bad because when you want to get married, you have to buy a house, which is not easy for a new couple, right, young couple. So develop the renting house is another big issue. But most important issues, we're going to speed up the reform to grant people live in the city, but don't have a city residential idea. So this is it's a very unique system. There are 150 million people living in the city, but they don't have a city ideas. They don't entitle to purchase an apartment in the city.
So a lot of very useful detailed policy areas there to focus on. Right. Do you sense appetite to introduce the policies that you mentioned? And how much difference would they make? Would that remove the overhang in Chinese property?
Yeah, I think those policy is out already, many. I think the 100 million people, the urban residential rights issue will on the slow path, but will speed up. I think that's just a big issue. But I think the whole real estate market will be stabilized at the end of this year. I don't see any systemic risk, big crisis in this sector. I think we'll be able to handle the whole thing, do the restructuring. Obviously, the structure will take a long time. I think at least 5 years.
We talked about overcapacity in the property sector. We keep hearing this word, overcapacity, from various Western leaders when they visit China. We've heard it from Germany. We've heard it from the United States. Janet Yellen talking about the West can't cope with overcapacity exported to the rest of the world by China. Do you see that level of overcapacity coming from China?
Yeah, but I think the overcapacity in the manufacturing is a vague sense because economically, first issue you will ask whether there's a government subsidy. The answer is particularly on EV solar panels is no, because most of the companies are private sectors and China stopped subsidy long time ago. The second issue, there's a dumping. The answer is no, because BYD sell the cars in here, Berlin, 2 times higher than the car is sold in China. So this is not the cutting price dumping process. But the EV, by nature, is a semiconductor sector. So it belongs to Moore's law. So it really, adaptations move very fast. So every 3 to 5 years, we'll have a new generation of cars.
Yes.
So you always have a new capacity move forward. You still keep a little bit of the older capacity. So overall, you will see our capacity is a little big. But this is just a process because it's a semiconductor sector.
We will see whether the European investigations into dumping, allegedly, and subsidies, whether they reveal different conclusions. But I appreciate you giving us your views. President Macron of France has talked about risks of global fragmentation being really high, Jimin. Is it too late to pull us back from some further deep fragmentation in the global economy?
Well, obviously, geopolitical risk is very high. Uncertainty is very high. But so that's the reason I think we need to work together. And after years, volatilities, particularly in the geopolitical risk, people realize we need to go back to fundamental issues on economics, on cooperation, on investments, on those issues. So working together toward a more sort of meaningful, sustainable international financial architecture to promote investments and trade issues become more important. I think that's the reason CC in France and we all here in Berlin joined the global solution.
Is it possible to put those relationships between Europe and China on a better footing then?
I think it's very impossible because after years and people realize at the end of the day, we need economic growth. We want to make sure that people have a better life day by day. So if we want to do that, we need to work together.
You mentioned the Berlin Global Solutions Conference. I know you're going to be focused on sustainability in some of the conversations you're having there. This is a really interesting sector because it illustrates some of the tensions we've been discussing. China has a lot that it wants to export in terms of innovative technology on renewables, but Europe isn't sure if it wants all of that or whether it wants to create its own. Do you think a path forward can be found in that sector?
Yes, I think the common sense here, particularly during my meetings with various parties, I mean, clearly we don't want to over-politicize this issue, because politicized issue will have a negative spillover to everyone everywhere, so which is bad not only for both countries, but also for the whole world.
One person's politicization is another person's jobs, though, and this is about keeping jobs.
We also need to find trade measures to deal with the whole things. I think China don't think it's have overcapacity issues, but also we need a concern because the scale and the speed of a Chinese EV, for example, so which is really a competitiveness issues with European auto industry as well. So we need to find a solution between these two ends. I think the conversation is going on now. It's a very positive move into that directions.
Okay, we'll see what transpires. Jumin, thank you so much for joining us. Jumin, Vice Chairman of the China Center for International Economic Exchanges, formerly of the IMF and the PBOC, visiting here in Berlin for the Global Solutions Development Summit. Coming up on the program, high-tech trading firms are gaining ground in fixed income. We will discuss the players reshaping the market. That's next. This is Bloomberg.
One of my greatest advantages, I own my company 100%. No board of directors. I make a decision, we move. And I had a guy say to me, runs a big media company. This guy ran a major division, Warner Discovery. Okay. It was just Warner Media at that time. He says, you know what, when we sit in our meetings, we don't talk about Disney. We don't talk about Paramount. We don't talk about Sony. He goes, you know who we talk about? I go, who? You. I said, really? He goes, yeah, you. I go, why? He goes, we are giant battleships, and you're like a little speedboat. And if there's gold on the beach, you run rings around us, get to the beach, take the gold, and by the time we turn our battleship around, you've already taken the gold. I go, that's right. I'm always gonna be that entrepreneur. I started my company from my dining room table 30 years ago. 30 years ago. And I started by calling every television station, asking them to carry my once-a-week show. On average, they all said no 50 times, and I worked through about 50,000 no's to get 150 yeses. That guy that was at that dining room table trying to pay his phone bill is that same guy today, 30 years later. That fire is still in my belly. I still run scared, and I'm still running after that vision of building the world's biggest media company.
Authorities.
We could face bigger challenges next.
It was going to keep Great World Cup. This is a three.
As the economic picture.
Covering the intersections of Hollywood, Silicon Valley, and beyond.
Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
Great question.
Great question.
Best question I get all night.
Bloomberg, top experts, great questions.
Welcome back. This is Markets Today, 8:48 in the City of London. 48 minutes into your trading session. Gains of 0.5% across the European benchmark. A bit of catch-up coming through from the FTSE 100 here in the UK, but adding gains currently of 70 points, 8,284. Over in Germany, the DAX adding 0.3% at 18,227. Top of your list, stand out for this, and this is going to make Guy sweat, I feel. UBS getting 8.7%, because Guy has been talking about the fact that these big mega cap names have been able to move with so much volatility. But look at that, 9% gain in a single session on the back of the earnings, and reiterating that they're going to be able to continue to return capital to their shareholders, at least through 2024. And of course, we've been sitting down speaking to the CEO of UBS. So banks are gaining, UBS giving a big lift there. Travel and leisure as a sector also performing relatively well on a sector-by-sector basis. We're looking at commodities, of course, geopolitics and focus for us today. BP, a challenge there with a miss on its earnings. But back to the banks, UniCredit also a beat. And interestingly, Infineon, the chip maker over in Germany, getting a lift today, even as they downgrade their forecast. Financial services, top of your list in terms of sectors, 2.3%. Travel and leisure, second highest gainer across your sectors, 1.5%. Now, after conquering stocks, high-tech trading firms like Jane Street and Citadel Securities are gaining ground in the bond market, storming territory long ruled by Wall Street's biggest banks. They are throwing everything from client relationships to transaction costs into flux. For more on today's Bloomberg Big Take, we are joined by Alice Atkins, who's been reporting out this story for us. Alice, what exactly are these banks, or these market makers, I should say, Citadel and Jane Street? What are they doing that's changing the nature of the bond market? What are their aspirations?
Well, electronic market makers have already taken a lot of market share in other assets like equities and FX. The electronification of fixed income has somewhat lagged those other assets, partly because the market's just a lot bigger, it's more complicated, there are no centralized exchanges and huge pockets of illiquidity. And that's why trading has remained for a bit longer in this sort of traditional phone calls between banks and their clients, rather than these alternative trading venues. But with the pandemic, that did accelerate the trend towards electronification. And firms like Jane Street and Citadel are seeing this as an opportune time to enter the market. That's Citadel Securities, not Citadel, the hedge fund.
I'm not even going to attempt to say that word, by the way. How do the banks react? I presume this is their business. What are they going to do?
It's definitely a direct competitive threat to the bank. These players are trying to trade directly with their clients. Their tech-based models means that they're ultra-fast and they can often quote cheaper prices. They're also not regulated in the same way that a bank is, which means they can be much more nimble when it comes to innovation and harbour more risk. So it's a direct threat, but it's also a lot more complicated than that, because these players aren't just the competitor, they're also one of the bank's biggest clients. And so electronic market makers use the banks for custody, clearing and settlement. So you've got this tension between competing with the banks for trading volume, but the banks also wanting to retain one of their biggest clients in the prime brokerage unit.
So, Alice, you've set out what they're doing and why, but you gave us some interesting detail there about they're not being regulated in the same way that banks are. So if that's the case, are there risks then for when we see the expansion of these businesses into the fixed income space?
The worry is that because they're less regulated, they could more easily pull away from the market during difficult conditions. But the evidence hasn't been quite there to back that up. When looking at the pandemic and the banking turmoil last year, that wasn't necessarily the case. More liquidity provided in the market should, on a net basis, be a positive thing. And because they're less regulated, they might be able to more easily harbour risk during stress conditions. The buy side certainly welcoming their presence, and Wall Street banks aren't giving up without a fight, and they're investing heavily to try and boost their platforms and retain their competitiveness. But some organisations warn that the broader move towards electronification is increasing instability in the market, and so episodes of heightened volatility could become the new normal.
Okay, so we'll see if regulators turn a laser eye to these developments. Really smart piece of reporting coming through from Alice Atkins on the Bloomberg Big Take today. You can check it out, of course, on the terminal and on Bloomberg.com or Bloomberg.co.uk. Alice Atkins, thank you very much indeed. Here's what else to watch out for today then. Last day of the World Policy Forum, Global Solutions Summit. Bloomberg's one and only Anna Edwards, of course, on the ground, speaking exclusively to the German Finance Minister, Christian Lindner. That's at 11 a.m. UK time. And co-chair of the Bill and Melinda Gates Foundation, Bill Gates. That's just after 3 p.m., I should say, London time. We're also going to bring you top speakers from the Milken Institute Global Conference throughout the day, including the Minneapolis Fed President, Neil Kashkari. That's at 4:30 p.m. UK. Also at 4:30 p.m. UK, ECB Governing Council member Joachim Nagel is speaking at the Bundesbank Joint Spring Conference. And at 6 p.m. UK, the US will be selling 58 billion of 3-year notes ahead of tomorrow's 10-year auction. So the issuance again story, and we'll see if and how well that is digested. Later, we're going to bring you US earnings, including Lyft and Disney. Anna, some interesting names on your panel today.
Yeah, absolutely. I'm going to be speaking, as you mentioned, the German finance minister. We're going to be in conversation. This is a development summit that I'm here for, guys. So there is very much a focus on that. The sustainable development goals set out by the UN and all the nations that sign up to that is very much part of it. But really interesting to talk to a finance minister with that in mind, because this is the person who has to make the books balance. And we know that here in Germany, making the books balance is very important to some people, in particular to Christian Lindner. So as you're seeing all these competing demands on the German public purse, interesting to get his take about what can be flexed, if anything. Of course, we talk a lot about the need to spend on defence, and that very much in focus here. I'll also be speaking to Bill Gates. He, of course, famously of Microsoft, but more recently talks a lot about his philanthropic work, of course, and he's going to be giving us the innovation lens here. So talking about on these sustainability goals, the way that innovation on various sectors can help us to fix some of these global issues that the world is facing. So a lot coming from the Global Solutions Forum here in Berlin, which is why I'm here.
And I think you'll be able to watch it on Live Go a little bit later on. Is that correct?
I think that is correct. That is correct, yes. We'll dig out any bits that we think relevant to a global markets audience and bring those to viewers over this evening and into tomorrow morning. But yes, Live Go.
We'll look forward to it. We're going to look forward to playing some of those clips as well tomorrow morning. Anna in conversation with some of the leading lights of the global economy. Can't argue with that. Should we wrap the show up and think about kind of where we are? Mm-hmm. The UBS story I find extraordinary this morning. The stock is off its highs. It's still up by over 8% today. Let me just plug in what the 2-day looks like, because you've come through yesterday's session into today. It's up by 10%.
So how much of this is down to the triple digit, or at least the 3 times beat on net income for the first quarter, or how much of it is down to the fact that Sergio Monti seems to have done quite a good job of trying to reassure around the capital question? And you were right to point out there's still a lot of questions that need to be answered on that front. But he says essentially we've got the 9 plus 10 billion, 19 billion, and he's being rather sanguine about the potential overhang of that capital question. So I wonder how much of this is a reaction to that versus the really significant beat in the first quarter.
I think it's probably a combination of both. I think everybody's looking to make sure that they are delivering on expectations in terms of that execution of putting these two banks together, and it looks like that is happening. The fact that he's, I think they're kind of punting the story on the capital requirements. They don't know yet. Let's push this a little bit further out. I think seems to be the narrative this morning. But the stock had softened on that risk, so we're getting a pop maybe. On what? I think it's a difficult question.
We've got Disney coming up later in the US. Bob Iger back at the helm, of course. Yep. He's dealt with that activist investor, it seems, for now. So we'll be looking at the Disney Plus component of that business, the parks as well, the movie part of that business. That's going to be an interesting gauge as well in terms of the health of the US consumer, I think.
Absolutely. But as you say, they've been through an awful lot with Nelson Peltz. They've tried to figure out exactly how they're going to push this business forward. So we're going to have that conversation coming up a little bit later on. We're going to be speaking to Hugh Johnston. He is the Disney's CFO. So looking forward to that conversation as well. That wraps things up for us here in Europe. We're all back trading this morning. It's a positive session thus far. A little bit of outperformance coming through from London. The Pulse is up next. This is Bloomberg.
Bloomberg has enhanced search on the terminal. to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Of politics to the world of business. Every weekday on Bloomberg TV and radio, hosts Joe Matthew and Keely Lines deliver news, insight, and analysis from and about politics' biggest power players.
The president has been clear that is non-negotiable.
I mean, this is going to be an ugly, ugly year.
Balance of Power, live around the world every weekday, only on Bloomberg Television and Radio. Context changes everything. It's the world's second largest economy, with a growing influence in global affairs. But geopolitical uncertainties, deflationary pressures, and questions about foreign investment linger. Bloomberg, the China Show, brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China. Bloomberg, the China Show. Weekdays around the world, right here on Bloomberg. Context changes everything. And market movers. This is The Pulse with Francine Lacqua.
Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in Zurich with what's coming up in today's program. UBS soars after outperforming expectations in the first quarter as wealth and investment banking beat.
Actually, it's a good momentum. You may remember in the fourth quarter, we also had a very strong performance in banking. As we integrate the new colleagues from Credit Suisse on our platform, we start to see the pipeline developing. We are able to execute.
More from our interview with the Chief Executive, Sergio Ermotti, coming up shortly. Now, the world's biggest oil exporter, Aramco, keeps its $31 billion dividend payout despite lower profit. BP maintains the pace of share buybacks despite missing estimates. And Israel rejects a ceasefire proposal backed by Hamas hours after the militant group agreed to the plan, while Israel vowing to push ahead with military operations in Rafah. Well, let's take a look at the European markets map. Again, it's Tuesday, and there is a lot going on. We do have a couple of Fed speakers a little bit later on, but if you look at European stocks in general, actually advancing on a pretty busy day for company earnings. Optimism also growing that the Fed will start cutting interest rates this year. Now, UBS, I think, gaining more than 6% after a return to profit. UniCredit also up on better than expected forecast. If you look at the 10-year treasuries extending some of their advances, the yield actually dipping 2 basis points to 4.46%. So let's look at cross assets. We are looking in particular to a lot of these treasuries because of auctions coming up. And then we have the Minneapolis Fed President Neil Kashkari also amongst some of the officials scheduled to speak a little bit later on Tuesday. I'm looking at oil actually advancing for a second day again on tensions in the Middle East, with Israel rejecting that ceasefire proposal for the Gaza Strip. And then you can also see yen 154.12. So the Japanese yen actually slipping. We did hear from the top currency official in Japan, Masato Kanda, saying there was no need for the government to intervene if the market is functioning properly. I'm really looking forward to our conversation with George Saravelos on all things currencies. Now, back to corporates, and UBS shares gaining their most since March of last year after the Swiss lender beat earnings estimates and returned to profit after 2 loss-making quarters. Now, strong performances in both wealth management and investment banking are helping UBS to really make sustained progress with the integration of Credit Suisse after its emergency rescue last year. Well, the chief executive, Sergio Ermotti, spoke to us about the company's performance, inflationary outlook, and of course the impact of capital requirements.
Depending on the outlook for rates and the economy, I would say if inflation comes down to the 2% targets and central banks are able really to cut rates, this may give a little bit of positive momentum. But on the other end, we need to also expect some uncertainties around major elections globally and how they play out more so in economic terms, in terms of trade wars or potential escalations of that matter, and even on the geopolitical front.
Sergio, do you worry that proposals put in place by Swiss authorities on capital raising really for systemic banks overshadows some of the work that you're doing at UBS?
Look, I think that we agree on the vast majority of what has been proposed. We already commented and highlighted the necessity of creating clarity. I think that at this stage, what we stay focused on is on executing on our strategy. We were not really consulted in this process, so it's also very difficult for us to comment certain aspects of those proposals. What we know is that we need indeed to absorb a lot of the capital requirements that are necessary to capitalize the new bank as a consequence of the acquisition of Credit Suisse.
But we've heard figures from 15 to 25 billion. Do you have a ballpark, or actually is there a very wide range of scenarios?
Well, there are two elements which we know. If I look at by absorbing and Credit Suisse, we have to basically bring their methodology for calculation of capital to our standards. And that means that we're going to have to basically increase the requirements by 9 billion. If I look at also the progressive element of that is driven by market share and balance sheet size, we are also expecting another 10 billion. So we are talking at around 20 billion of additional capital that we already factor in our financial planning and targets for 2026. So we know that, indeed, acquiring Credit Suisse will cost UBS around 20 billion more capital. So that's the only comment I can make. Other figures, I can't really comment on them because I don't know exactly what they mean, and it would be not appropriate for me to speculate or respond to speculations.
But so is your working assumption that actually, even in worst case scenario, it won't actually hurt the dividend? It's not going to hurt some of your financial targets?
Well, that remains to be seen, because as these rules are developed and clarified, we will need to then assess exactly how they play into our capital return plans. For 2024, we are accruing for a double-digit increase of our cash dividend, as we previously communicated. So in the first quarter, we did that. And after the parent bank merger, at the end of May, we will be prepared, if everything goes as smooth as we expect, to execute on our 1 billion capital return plans, i.e. through share buybacks.
So when do you think you'll get clarity from Swiss authorities? I mean, a timeline, I guess.
I think this is still, so for me it's very important, and I do expect that no final decision will be taken before the investigating commissions of the parliaments clarifies all what happened around the failures of Credit Suisse. I think it's very important not to jump into conclusions too quickly about this matter. So if you look at that matter, it's very difficult to expect clarity before year-end, or probably even the first part of 2025.
Well, we'll bring you more from that interview with Sergio Armotti, the UBS chief executive, a little bit later on in the show. Now, markets have been buoyed by optimism that the Fed will start cutting rates this year. Investors are revising their bets due to soft U.S. jobs data. Well, I'm delighted to be joined by Simon Dangor, head of fixed income macro strategies at Goldman Sachs Asset Management. Simon, great to see you. I can't believe you're in London and I'm in Zurich, but it goes that way when you have big earnings out of Zurich. When you look at the global macro environment, Simon, is there a misunderstanding from parts of the markets of what the Fed does?
Thanks very much for having me this morning, Francine. Q1 inflation in the US was clearly disappointing, but when we look at the broad drivers of inflation, we're in a totally different place to where we were in 2022 and 2023. Inflation expectations are well behaved. The labor market continues to show signs of easing. We got more information favorable to that on Friday. And so we believe that we're going to see more disinflation play through over the course of this year, and therefore Powell's wait-and-see strategy is the right one, and that the risks of new hikes from the Fed remain quite low, and we are likely to see cuts in September. So we think the Fed is guiding to something which does look like an appropriate strategy. We think investors have broadly got it. In many respects, the most interesting tactical opportunities in fixed income markets right now maybe are in this time zone. And we'll get some more information from the Bank of England and the Riksbank this week, which will be interesting to follow. But the broad picture is that the bond-friendly environment has been delayed rather than derailed, and we've got a friendly central bank behind that.
So, Simon, we're expecting, of course, a lot of European central banks. I'm thinking of the Bank of England and the ECB of actually cutting rates far quicker than the Fed. Does the gravitational pull towards the Fed actually complicate things for European economies?
I think ultimately the Fed does matter. The Fed sets the price of global capital to a large extent. But I think it's important to remember the starting point of rates out in Europe and the fact that we are very clearly at levels that are above neutral. I think you can see a picture that things are much clearly tight in Europe, and particularly if you look at a place like Sweden, probably a place where you can make the strongest case that things are tight. And so certainly the first 100 or so basis points of cuts, we think, can be done quite independently of the Fed, and that leaves us constructive on parts of fixed income out in Europe.
So what does that mean for example, places that you like in Europe with that first cut in June coming from the ECB? What happens next? And does it impact, to a point, a lot of the Italian bonds or German bonds to where you want to come in and swoop some of them up?
Well, I think that in many respects, Europe seems better priced than some of the other markets. So the ECB, we expect they're going to cut in June. That's well priced by the market here. Something like 3 or 4 cuts over the balance of the year would be where our expectations are. So upside in European fixed income, we like steepeners. Ultimately, that will be a positive backdrop for European credit, including sovereign bonds. I think where the real opportunities are some of the satellite markets in Europe. UK, the market's priced for only 2 cuts from the Bank of England this year. We expect the Bank of England will probably start cutting in June. The debate in the market has really been about whether inflation risks in the UK are different or similar to elsewhere. All of our analysis suggests that they're more similar. We're seeing signs of things easing up in the labour market. We're starting to see members of the Bank of England that had previously been more hawkish start to talk in a more open-minded case towards a dovish outlook. I think Hugh Pill is going to be a key person to watch if he makes the transition over sort of coming communications. So expecting the Bank of England to start to lean more dovish when we get communication from them on Thursday, cut in June, and cut much more than what's priced into the forecast. So that in this time zone is where we sort of lean more constructive. European fixed income itself looks somewhat better priced.
Yeah. Simon, what about the Bank of Japan and actually what that means for Japanese assets? I don't know whether, again, the schism or actually when we really start this divergence play, what that means for opportunities in the markets.
Well, this is one of the fascinating things about 2024. In many respects, the opportunities are not necessarily just in the overall level of rates, but in how different parts of the G10 are going to be heading in different directions, which is obviously quite a different setup from what we've seen over the course of 2022 and 2023. We've talked a little bit about sort of Europe decoupling somewhat from the US, but the big decoupling we think is in Japan. The inflation process in Japan is in a different place to what we've been used to in Japan for such a long period of time. You see that in wages. You see that very obviously in inflation expectations. And whilst there's not runaway inflation by any means in Japan, the starting point of real policy rates in Japan is just so far away from what we see in the rest of the world. That real yield gap is really as large as it's ever been. And with that, we're seeing this sort of very significant depreciation of the yen. We might get periodic interventions like we saw last week, but ultimately, until that real yield gap closes, there's going to be upward pressure on the Japanese inflation process. So we're surprised that the market, particularly in the intermediate part of the curve, doesn't put more risk premium around the idea that the Bank of Japan is going to have to go faster than what's currently priced. And this is going to be an interesting world. Bank of Japan hiking rates, US potentially cutting rates later this year, and Europe going in the middle of the year. So divergence, and with that, quite a lot of active opportunities, we think is going to be the story from here.
Yeah, and so Simon, when does that change? When does the market realize what you were talking about? Is there like an opportune window to get in there?
Well, for Japan, we think that ultimately one of the things that has been holding things back is just the lack of supply of Japanese bonds for the markets to buy. The Bank of Japan is likely to start to pull back on their inbound purchases. That's going to create some more duration supply to the market, and we think that that can start to allow more risk premium to build up in Japan. But we think that the risk reward right now is very attractive, both outright to be underweight Japanese bonds, but also to be underweight Japanese bonds versus some of the markets in Europe, which we could see fall to lower yields.
Sam, very quickly, any worries about some of the auctions in the US?
I mean, obviously, this has been a fascinating subject, and the market has sort of struggled over the last 6 months or so to really calibrate how to price the fact that we've got an enormous amount of duration to buy when you look out over the medium term. And it's one of the reasons that in our duration positions, we tend to favor steepness. But I wouldn't overstate the risk that comes from the bond supply. I think that the Treasury have made a lot of progress in giving the market a lot of transparency and visibility about what we're going to get in terms of duration supply. I think what investors sometimes under-focus on as well is that private sector duration supply is likely to be quite low. This is one of the reasons that leaves us constructive credit markets, and we think that we can stay in a sort of tighter for longer environment because the incentives to issue debt are much, much lower than has been the case over the last 10 years or so. And that's ultimately going to be something of an offset to the very heavy duration supply out of the Treasury. But for sure, we're probably going to be living in a materially higher term premium environment than we've been used to for some time.
Simon, thank you so much. Simon Dangor there from Goldman Sachs Asset Management. Much more to come, and this is Bloomberg.
Welcome to the world of decentralized finance.
With the surge in Bitcoin, you have crypto stocks also surging.
Bloomberg's covering all things crypto, the people,
This is a political attack, and we must hold our elected officials accountable.
the transactions,
Really a record-breaking moment.
Bitcoin is the exit strategy.
and the technology.
Awareness is going to grow, and these things grow the overall industry.
Crypto as an asset class is here to stay.
Bloomberg Crypto, only on Bloomberg.
This is Bloomberg News Now.
News when you want it at the touch of a button.
Another volatile day on Wall Street. We're seeing big moves.
All eyes on Capitol Hill as Democrats and Republicans prepare.
Today's job numbers casting doubt on the Fed's next move. Inflation remains front and center. And that's news when you want it with Bloomberg News Now. Get it 24/7 on the Bloomberg Business app, Bloomberg.com, and anywhere you get your podcasts.
Bloomberg News Now. Context changes everything.
Now, energy giant BP is maintaining the pace of share buybacks. That's even as first quarter profit fell by more than expected amid lower natural gas prices. Meanwhile, the world's biggest oil exporter, Aramco, is to pay $31 billion in dividends to the Saudi government and other investors. Well, let's get more from Bloomberg's Middle East energy editor, Anthony Di Paola, who's in Dubai. Anthony, thank you for joining us. So dividends, of course, one of the biggest focuses for the big oil companies this quarter. What's BP doing?
Yeah, good morning, Francine. Yeah, that's true. Getting cash back to shareholders was a big theme across the majors and the big oil complex for this quarter. So BP largely missing on a lot of those estimates, but kind of heartening investors with that pledge to give back $3.5 billion in the first half. And they've also made some promises of some cost cuts as well, too. So trying to improve some of those metrics by taking some costs out, and then looking at that all-important stock price issue for them with this buyback issue. So that's really following a theme, even as the oil companies are suffering largely lower profit because of some of the slump in oil prices, of course, from those highs of 2022 when we saw all those companies posting bumper profits.
So, Anthony, how's Aramco's dividend policy developing, and why is that so important?
Yeah, well, Aramco's got a pretty clear dividend policy set out for this year. They've got a base dividend which they want to keep growing and increasing. They want to have that being progressive, and then they've got this special dividend which is based on again that 2022 bumper year and 2023. So that should be largely set out for this year. They've had a roughly 20% increase, so about $120 billion in dividends, which is going to be the plan for this year. But that's so important because that's necessary really to go into those Saudi government coffers. Saudi's got a lot of spending coming up. They're having to tweak some of the project plans and cut back on some of the issues. So they really need that income from Aramco coming in. And so that's why it's very important. But we're also watching cash flow and we're watching investment from Aramco because, of course, those things can be impacted by that dividend that's going over to the government, Francine.
Anthony, thank you so much. As always, Bloomberg's Middle East energy editor, Anthony Di Paola. Now, coming up, Israeli troops seize the Rafah border crossing in Gaza as hopes for a ceasefire deal dim. We'll have the latest on the Middle East conflict next. This is Bloomberg.
Fixed income fix. Watch Bloomberg Real Yield every Friday right here on Bloomberg. Context changes everything. Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern only on Bloomberg. Context changes everything.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg. Context changes everything.
Israeli troops have taken control of the Rafah border crossing in Gaza this morning, with Hamas saying all aid flowing through there from Egypt has now stopped. Now, this comes after Israel's war cabinet rejected a ceasefire plan backed by the militant group. Well, I'm joined by Rosalind Matheson, Bloomberg's EMEA news director, who's been, of course, keeping on top of all these developments. So, Ros, how much is this a precursor to a proper ground offensive in Rafah?
Well, certainly it's an important signalling exercise, the fact Israeli troops have moved into the Rafah border area, the crossing area, for the first time since the conflict broke out. And as Hamas and Arab media are saying, that's cutting off the flow of aid and people into that crossing between Egypt and Gaza. And really following the airstrikes also that we saw on parts of Rafah last night, it is that signalling moment, which is despite the fact that Israel has said, we will still go on with talks on a ceasefire, we won't agree to the current terms, we're willing to keep talking. At the same time, they're making their preparations for an offensive inside Gaza. They're moving to get a lot of people out of the way. They have to relocate an awful lot of civilians out of harm's way. And it's really saying, no matter what happens with those talks for a truce, our intent is still to go into Rafah because our overall goal is to try and eradicate Hamas.
So what do we know about the current status of the ceasefire talks?
Well, Israel says it's willing to sit down and keep talking, although it rejects the current agreement, the one that that Hamas said it would sign up to. And there's a lot of disagreement over small amounts of wording in those talks, but it's really about what the language would be in that agreement for a ceasefire that would be the prelude to a proper end to the war. How does this ceasefire pave the way for that war to end? That's what Hamas wants. Israel says it wants to be more open-ended because obviously, again, it wants to have the option to keep fighting against Hamas inside Gaza. So we're going to see the talks continue, but there's not a lot of prospects for an agreement. And time is obviously running out to use that ceasefire to stop an offensive inside Rafah.
Ros, thank you so much. Rosalind Matheson there, Bloomberg's EMEA news director. Now, coming up, comments by the U.S. Treasury Secretary are piling also more pressure on currencies such as the yen. We discussed the strong dollar and, of course, what it all means for FX. This is Bloomberg.
CFOs are reshaping the C-suite. Bloomberg's chief future officer shines a spotlight on these dynamic leaders.
It's an incredibly fun job, for sure.
We're in the business of leading beyond the numbers.
To me, teamwork is key.
You need to identify opportunities and push people.
It's not about how to say no, it's about how to say yes.
Their impact goes far beyond the balance sheet. And on Chief Future Officer, they focus on much more than just revenues and margins.
Today's CFO has to be much, much more than a bookkeeper. I talk more about culture today than I talk about numbers.
It's not just about debits and credits and digits and dollar signs.
It's a lot more than the profit today. It's building the future of tomorrow.
Get passion, perspective, and more from the Chief Future Officers of some of the world's most influential companies. New episodes this summer, only on Bloomberg. Brought to you by Workday.
Always on the heartbeat of the tech
spread across global markets.
The real-time data aspect is going to be important.
We're going to bring you expert analysis on that. Sure.
Don't miss Bloomberg's interview with the
Well, UBS soars after outperforming expectations in the first quarter as wealth and investment banking beat.
Actually, it's a good momentum. You may remember in the fourth quarter, we also had a very strong performance in banking. As we integrate the new colleagues from Credit Suisse on our platform, we start to see the pipeline developing. We are able to execute.
Aramco, the world's biggest oil exporter, keeps its $31 billion dividend payout despite lower profit, while BP maintains the pace of share buybacks despite missing estimates. And Israel rejects a ceasefire proposal backed by Hamas hours after the militant group agreed to the plan, while Israel vowing to push ahead with military operations in Rafah. Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in Zurich. Now, Chinese President Xi Jinping has called on France to help fend off what he called a new Cold War. Xi is on his first visit to Europe in 5 years with the aim of resetting ties with the European Union. So let's get more from Bloomberg's Caroline Conan in Paris. Caroline, thank you for joining us. Has there been any progress made between the two leaders?
On the geopolitical front, we can't say there has been any progress, really, even though the President Xi called for a ceasefire in the Middle East. Shortly after, you had these airstrikes on Rafah in Gaza. But Macron did try to use China's support in order to weigh in the war in Ukraine. You know, the relationship with President Xi and the Russian President Vladimir Putin has been quite close. And in fact, Vladimir Putin will travel to China shortly after Xi returns from Europe. On the trade front, it was also quite frictional because you had the EU Commission President Ursula von der Leyen, who participated in the first trilateral meeting with President Xi, and she had very tough words criticizing China's production surplus, saying the world cannot absorb it all, and the EU was ready to use all the available tools to protect itself. President Xi rebuffed all these calls, saying that China does not have an overcapacity issue. And in fact, President Macron had a much more pragmatic approach, saying that the trade policy of the EU should remain independent, meaning independent from the US, so trying to distance himself from this position of von der Leyen. There wasn't any major business deals announced, only a few cooperation agreements in the aviation sector, for example, or the cosmetics sector. But President Macron did have a small victory when it comes to to cognac, saying he was hopeful that China would abandon their measures against the French cognac makers. In fact, Macron gave President Xi as gifts 2 bottles of cognac, one from NSC and one from Rémy Cointreau. And today, as we speak, they are landing in the Pyrenees in the southwest of France for a little bit of an appeasement and a little bit of a fun side of the trip. Macron will take President Xi to the Pyrenees Mountains, perhaps to appease the frictions from yesterday.
Yeah, quite amazing, actually. Extraordinary, Caroline, because I think he's taking him to where his grandmother lived and grew up. So I guess it's quite unusual. It's as a sign of friendship to bring him there, Caroline Conan there in Paris. So we'll follow, of course, President Xi's visit to the mountains. We also look at the Bank of Japan, the yen remaining under pressure, and some in the market think it could slide back to 160 per dollar. Now, that's in the wake of comments by the Treasury Secretary, Janet Yellen, who said the U.S. expects interventions to be rare and consultations to take place. Well, our next guest says FX intervention is not credible and that Japan is following a path of benign neglect for the yen. Well, let's discuss all of this with George Saravelos, Global Head of FX Research at Deutsche Bank. George, first of all, thank you so much for coming in. I've been waiting and pacing to actually have your take on yen and what happens next. There was an interesting, actually, line from the top currency official in Japan, Masata Kanda, saying there was no need for the government to intervene if the market is functioning properly. But we also understand that the BOJ governor is currently possibly meeting with the Prime Minister of Japan. What do you think they're telling each other?
Thank you, Francine. It's great to be back on your show. So it's interesting because you're starting to see some divergence between the rhetoric coming out of the BOJ and the actions of the Ministry of Finance. Governor Ueda actually gave an interview to the Peterson Institute just a few days ago where he talked about inflation not really being a major problem, as in they're still trying to get it to 2%. At the BOJ meeting itself, he was talking about the yen not being a huge driver of the economy, not being hugely relevant for inflation. And then we got MOF intervening. I think the Ministry of Finance intervened because price action did start becoming disorderly. You did see very large moves that were unusual as we went up and broke key levels. But at the end of the day, the fundamental driver of yen weakness is the fact that real rates in Japan are extremely negative. They're below -2%. And as long as that's the case, we think and as long as the Bank of Japan doesn't hike rates expeditiously, we think the yen will stay weak, unless you've got a view of a US recession, which we don't have.
George, we're just getting actually some breaking news from the BOJ governor saying that he discussed FX with the Prime Minister. He also says they're closely monitoring the recent FX situation. I mean, that was probably expected. I'm sure they are monitoring. So you're not expecting any meaningful intervention because of what you're saying on real rates. I mean, if they wanted to intervene, would it actually not make a difference?
I think it's very likely we did see intervention. If you look at the Bank of Japan current account data, we'll see confirmation of that in a few weeks. But actually, the intervention we saw was very much in line with history. It was we saw a 2-week move in dollar yen of more than 4%. So the price moves were extreme. And I think the MOF, Ministry of Finance, is becoming quite open that they don't want very large disorderly moves. We have to remember that dollar yen moved by 10% higher over the course of this year, more than 10%, and they didn't do anything. So they intervened when the move became disorderly, as they said they would, and I think that's fair enough. But in terms of managing to get the yen structurally stronger, it's all about the Bank of Japan. And as long as the Bank of Japan doesn't have urgency, you'll see these very negative real rates, which are prompting these continuous outflows from the Japanese. So at the start of the year, for example, you saw record outflows from Japanese investors into US equities, into foreign assets, and they're doing very well out of those investments. So you need the real rate to change out of Japan.
But George, do we sometimes forget, I just came back from a family trip to Japan, and actually it felt like everyone was there from all over the world to try and catch a glimpse of these cherry blossoms. I mean, yen weakness could have its advantages.
Absolutely, and in a piece we wrote a few days ago, we said if you look at the Japanese economy, as you mentioned, tourism is doing very well because it's very cheap. But I think at the core of the issue is when Japanese real rates are so low, it actually creates fiscal space for the government. It allows for asset price reflation. And if you look at the level of inflation in Japan, it's very different from 2 or 3 years ago in the US and Europe, where we were at levels of 6, 7, 8% inflation. In Japan, it's at 2%. So yes, the yen is contributing to some inflation, but the level of inflation discomfort is much lower. And that's why you have consumer confidence, which is actually at cycle highs, in contrast to the US and Europe. I'll mention one last thing on... sorry, go ahead.
No, go ahead, George.
One last thing on the tourism issue. You said you've been there, it was very cheap. I have a number of colleagues who've been there, they observed the same thing. But if you look at the trade balance, yes, it's moving in a more positive direction. So Japanese exports are becoming cheaper, so the Japanese are able to export more. But it's not into a huge surplus. The trade balance is not at extremes. So that's telling you, while dollar-yen valuations, when you look at them on a chart, they look very extreme. It's not yet translating into massive export outperformance, into a huge current account surplus. So perhaps these valuations are not as extreme as history may imply.
George, what's your take on Janet Yellen and actually her appetite to lead intervention? She was at a press conference a couple of weeks back with the finance minister of Japan and Korea and seemed to suggest that, yes, dollar strength is a problem for a lot of people, but then she seemed to also be walking back on some of those comments in the last couple of days.
So I thought that was a fascinating comment because, as you alluded to, we did have a joint statement from Korea, the US, and Japan about currency moves, and the market interpreted that as potentially the US Treasury validating intervention from the authorities. And it was a bit of a walkback in terms of expectations of intervention, being that it's rare when it happens. I think it's also interesting if you contrast it with some of the comments coming out potentially from President Trump in terms of the levels of dollar-yen being too high and stories around changing dollar policy. So there is a bit of a difference emerging between the current administration, where despite a strong dollar, which is creating pain in manufacturing, this insistence on maintaining the G7 commitments, and also the separation between Treasury and Fed, that is coming up as a divide between potentially the approach of a potential second Trump administration. So as far as the dollar direction goes, we are very attentive to rhetoric on the dollar, especially potentially from Trump administration officials. And does that rhetoric eventually translate into a weak dollar policy? So we are dollar bulls, but we're watching this issue of weak dollar policy as a potential issue for the dollar over the next few months.
I know Fed expectations are moving all over the place, but what's the percentage chance of a rate hike at this point from the Fed?
I think it's still quite low, because even though you have headline inflation, core inflation, which looks stuck around high levels, if you look at everything else the Fed is looking at, so for example, the labor market, all the key indicators of slack in the labor market, they are building. This owner's equivalent rent issue, which is keeping inflation again elevated, all the forward-looking indicators are coming down. So I think the bar, as communicated by Powell, is very high for a hike. This being said, if inflation does stay very sticky at these levels for the next few months, I don't think we can rule anything out. And as you mentioned, the market was pricing 50 basis point of rate cuts this last March, and we saw how uncertain and how things can change. I think the key issue when you look at the US economy, and the key reason that's driving this structural outperformance versus the rest of the world, is, number one, fiscal policy. You just have this continuously expansive fiscal policy, which you've never seen before, much larger than the rest of the world. Now, if that was to persist after the election, if fiscal policy was to be even more expansionary, that would be a major inflationary driver. And at the same time, you have an economy that's extremely deleveraged. So if you compare private sector leverage in the US versus the rest of the world, it's extremely low. And that's what's providing the robustness and I think the consistent US outperformance over the last year or so.
George, finally, we have the Bank of England on Thursday. Some of the hawks have turned less hawks or less hawkish. What are you expecting from the Bank of England, and what does that mean for sterling?
So our house view is that the Bank of England does start cutting in June. I would say the risks to that are definitely skewed towards later. When you compare inflation in the UK versus the rest of the world, it looks a lot more similar to the US in terms of it looks stickier. When you look at fiscal policy, again, the rest of the world, Europe in particular, is tightening policy. In the UK, it's staying easier. So I think that combination does justify to some extent the market not pricing that many Bank of England cuts. And in terms of the pound, as long as the market is in this soft landing scenario, which I think is a very reasonable scenario to have, the pound's a high yielder. The UK's avoided a recession despite 5% rates. And again, here the UK looks a bit more similar to the US because of low levels of private sector leverage since Brexit. So if I put all these together, I think even if you get a Bank of England rate cutting cycle, it will be gradual. Pound stays a high yielder, so we expect it to stay strong unless you get a recession.
George, brilliant as always. Thank you so much for coming on. George Saravelos there, Global Head of FX Research at Deutsche Bank, on some of the FX moves that we're watching very closely. Now, coming up, more from our interview with the UBS Chief Executive, Sergio Ermotti, as the Swiss lender tops estimates. This is Bloomberg.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Good morning. This is Bloomberg Surveillance.
This is Bloomberg Daybreak Europe.
You're watching The China Show.
This is Bloomberg Technology.
This is the countdown to the close.
Welcome to Balance of Power. This is Bloomberg. From the world of politics to the world of business, every weekday on Bloomberg TV and radio, hosts Joe Matthew and Keely Lines deliver news, insight, and analysis from and about politics' biggest power players.
The president has been clear that is non-negotiable.
I mean, this is going to be an ugly, ugly year.
Balance of Power, live around the world every weekday, only on Bloomberg Television and Radio. Context changes everything.
So let's return to our top story this morning. UBS shares are gaining the most since March last year after the Swiss lender beat earnings estimates and returned to profit after 2 loss-making quarters. Now, the chief executive, Sergio Ermotti, spoke to us about the company's performance and the outlook for the year ahead.
Actually, it's a good momentum. You may remember in the fourth quarter, we also had a very strong performance in banking. As we integrate the new colleagues from Credit Suisse on our platform, we start to see the pipeline developing. We are able to execute. And so it's very much aligned with our expectations of improving the mix between our markets business and our banking business in the investment bank.
So in the investment bank, where do you see the biggest strength? I know we also heard about possible job losses in Asia. Is Asia at the moment weaker than, for example, parts of the US in investment bank?
No, I think that we reinforced our franchises globally. I think that, of course, we are still going through across the entire bank. We are still a lot of work to be done to restructure the businesses and to bring them back into even stronger profitability. So I think that is a good momentum. We achieved almost a 10% return on CET1, which is still a third or 50% away from our final target. So still work to be done. We always say that 2024 is an important year. And as we now approach the end of May, we're going to execute on our legal entity mergers, which allow us to unlock in the future further cost savings.
An important year, 2024, because it's also a more difficult year to 2023?
No, because it's a more, first of all, we have two huge milestones, the merger of our legal entities, and the second one, we start to do the migration of clients from the Credit Suisse platforms into the UBS platforms. So this is very technical, still requires a lot of support and people to do that. And but as we start to do that, we can unlock some cost savings, but also unlock capital savings, funding savings, and therefore, achieving our final targets to achieve 13 billion of savings by the end of 2026. For this year, we do expect half of that being achieved, so 6.5 billion.
Sergio, when you look at global wealth, I mean, the outlook talks about interest rate cuts. Again, how do you worry about things that are outside your control?
Well, things that are outside our control, you always need to wonder what can happen on the geopolitical front, what can happen on any sudden change in the macroeconomic picture. So I think that we do indeed factor in our outlook for NII, for example, 3 rate cuts in the US, 2 rate cuts in Switzerland. This can change. And if it changes, may be beneficiary to our NII, but maybe the underlying macroeconomic event is not so positive. So, we need to always assess. Well, we are prepared for any scenario.
Well, that was the UBS Chief Executive, Sergio Ermotti. Let's bring in our Swiss Bureau Chief, Alessandro Speciale. Alessandro, I mean, look, he was on fine form today. He said, look, everything is in place, but then, of course, the Swiss capital requirements, it's beyond his control. I'm surprised the share price is gaining some like 7 or even 8% as we speak. I'm surprised there's not more worries about that, given how much capital requirements they could need.
Yeah, I mean, investors are really liking the 3 times as estimated profits that UBS reported this quarter. So these were strong results, and clearly investors think that this is a solid foundation going forward, no matter what the Swiss government does. This is a big cloud, this is a big uncertainty, and in Switzerland, if you want, there is a bit of uncertainty. There has been so far a big honeymoon also with the Swiss public. UBS swooped in and saved Switzerland, saved Credit Suisse and, from a big embarrassment also for the whole of Switzerland. Now, of course, there was a bit of noise around Ermotti's pay, most paid banker in Europe, but these results show that UBS is delivering on what it had promised when it took over Credit Suisse.
But Alessandro, I mean, this is a problem. After honeymoon, usually you have your first fight as a couple. I mean, is this a fight? He was trying to minimize, actually, the impact. And at some point, he also said, look, we need more capital requirements to make sure that the system is safe. But again, it's an overhang when you're trying to build profit and revenue to compete with the Americans.
Yeah, I mean, Switzerland went very much in the direction of UBS to make it easier for it to take Credit Suisse. It was very complicated, but now that it's shown that it can deliver, that it is delivering profits, even as it continues this enormously complex integration, I guess there is a sort of big of a backlash from the Swiss side, and also the finance minister, Kelle Sutter, which was the one who orchestrated the takeover, has also said that she was a bit concerned about the level of Ermotti's pay. This is a bit of sort of the swing of the pendulum, but Ermotti has shown that so far it can deliver on what he has promised.
Alessandro, as always, thank you so much for joining us. That was Alessandro Speciale in Zurich. More to come, and this is Bloomberg.
It's the world's second largest economy with a growing influence in global affairs. But geopolitical uncertainties, deflationary pressures, and questions about foreign investment linger. Bloomberg, the China Show, brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China. Bloomberg, the China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
This is Bloomberg.
DOJ or other authorities.
Could face bigger challenges next.
It was going to keep Green World Cup. This is a 3.
As the economic picture.
Covering the intersections of Hollywood, Silicon Valley, and beyond.
Welcome to the world of decentralized finance.
With the surge in Bitcoin, you have crypto stocks also surging.
Bloomberg's covering all things crypto, the people.
This is a political attack, and we must hold our elected officials accountable.
The transactions.
Really a record-breaking moment.
Bitcoin is the exit strategy.
And the technology.
Awareness is going to grow, and these things grow the overall industry.
Crypto as an asset class is here to stay.
Bloomberg Crypto, only on Bloomberg.
Well, Disney is expected to register an increase in subscribers to its streaming service when the company reports earnings later today. Now, for more on all of this, we're joined by Bloomberg's Charlie Wells. Hi, Charlie. So what will investors be looking out for in the numbers from Disney?
Yeah, Francine, so it's all about Disney Plus and parks. So we heard CEO Bob Iger talk a pretty big talk earlier this year about the potential for streaming growth on Disney Plus. This is something that a lot of entertainment companies have really been focused on trying to grow. Now, analysts are expecting some growth there, but perhaps not as big as Iger was talking about during that important battle with an activist investor earlier this year. But also we need to focus on parks. So in 2023, theme parks were actually made up 70% of Disney's operating income. So there's going to be a lot of focus on how many people they can drive to parks, particularly in Orlando.
So, Charlie, Boeing also disclosed, I love Orlando, by the way, Boeing disclosed possible missteps involving the 787 Dreamliner yesterday. That's prompted investigation. What more do we know?
Yeah, Francine, so this is the last thing that Boeing really needs. They have been under scrutiny since January 5th when a door plug blew out on a 737 MAX. Now, this investigation involves a different airline, a 787 Dreamliner, and what we know is that Boeing has alerted authorities that there were potentially missteps in inspections on some of those planes. We know that this is not an immediate flight issue, but it will disrupt production at Boeing factories.
Charlie, thank you so much. Charlie Wells there with the very latest on Disney and Boeing. Well, that's it from Zurich. Bloomberg Brief is up ahead, and this is Bloomberg.
What do you consider to be the biggest challenge?
Infrastructure that supports trade is the biggest challenge. Our senior brother, President Adesina of the AFDB, estimates the annual deficit, infrastructure deficit in Africa to be over $100 billion. But that over $100 billion is actually also an opportunity for investment. So it is a massive, significant challenge that we are confronting. And my fear is that we may succeed in establishing a very effective legal construct and a very effective legal foundation for trade liberalization and investment liberalization in Africa. But all of that will come to naught if the infrastructure deficit is not addressed, because you will need the goods to move somehow, and you will need to have good trade corridor connectivity, ports, trade corridors that connect countries that are landlocked to the ports.
This is Bloomberg News Now.
News when you want it at the touch of a button.
Another volatile day on Wall Street. We're seeing big moves.
All eyes on Capitol Hill as Democrats and Republicans prepare.
Today's job numbers casting doubt on the Fed's next move. Inflation remains front and center. And that's news when you want it with Bloomberg News Now. Get it 24/7 on the Bloomberg Business app, Bloomberg.com, and anywhere you get your podcasts.
Bloomberg News Now. Context changes everything.
Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
Great question. Great question. That's a question I get all night.
Bloomberg, top experts, great questions.
Good morning from our global headquarters in New York. I'm Manus Crenny with Danny Berger. Welcome to Bloomberg Brief. Let's set your agenda.
Israel troops take control of the Rafah border crossing as ceasefire talks drag. UBS soars. The Swiss bank returns to profit as wealth and investment banking beat. And up next in earnings, Disney may post another subscription gain before the bell today. Good morning, Manus.
Let's hope that they keep the dream alive, Danny, at Disney, because we've got, again, momentum is in our favor. Two-year notes are down in terms of yield, 480, so we've moved over 20 odd basis points in the space of a couple of days. Positioning in this market, according to Pictet, U.S. exceptionalism is overrated. Well, is it? Have a look at some of the stocks that we're tracking for you. Lucid Motors down by over 8%. Again, a bit of a challenge there in terms of the loss per share. Keep an eye on UBS, soaring higher, as you say, in the headlines. This is about a bank returning to profit, running down its non-core assets fast and furiously, and building up capital to the level that systemically may be required. Two-year yields are down by 2 basis points. The cuts are coming. Ken Griffin said that they will be here by Christmas. I believe in Ken. There was a hunger for the 6-month T-bill auction yesterday afternoon. Today, we're going to see a little bit more of a test. $58 billion worth of 3-year paper. Morgan Stanley talk about a rapid deceleration in the PCE. Buy bonds. The narrative was very clear. Dollar yen, we've just had a few lines from Ueda. This is the dollar up. This is the yen down again. The consideration is what happens next. Ueda had a meeting with Kishida where he said they are monitoring the weak yen and its effect on prices. But for now, no repropulsion of yen strength. Danny, good morning.
Good morning, Manus. All eyes to UBS this morning with that earnings report. And this is how you set the bar low, Manus. It was only in February we had heard from Armati that said 2024 is a difficult year. It is a pivotal year. Not that it means it's not difficult, but setting that bar low and then returning to profit, good results for investment bank, huge results for wealth management. That's how you juice up the share price.
Well, they sold assets to Apollo. They took in $272 billion for that, $272 million for that. And of course, they're already accumulating capital. And this is the critical issue in terms of what the regulator are going to ask UBS to put aside. But Bloomberg's Francine Lacroix, she sat down with the CEO, Sergio Motti. Let's take a listen.
Actually, it's a good momentum. You may remember in the fourth quarter, we also had a very strong performance in banking as we integrate the new colleagues from Credit Suisse on our platform. We start to see the pipeline developing. We are able to execute. And So it's very much aligned with our expectations of improving the mix between our markets business and our banking business in the investment bank.
So in the investment bank, where do you see the biggest strength? I know we also heard about possible job losses in Asia. Is Asia at the moment weaker than, for example, parts of the US in investment bank?
No, I think that we reinforced our franchises globally. I think that, of course, we are still going through across the entire bank. We are still a lot of work to be done to restructure the businesses and to bring them back into even stronger profitability. So I think that is a good momentum. We achieved almost a 10% return on CET1, which is still a third or 50% away from our final target. So still work to be done. We always say that 2024 is an important year. And as we now approach the end of May, we're going to execute on our legal entity mergers, which allow us to unlock in the future further cost savings.
An important year, 2024, because it's also a more difficult year to 2023?
No, because it's a more, first of all, we have two huge milestones, the merger of our legal entities, and the second one, we start to do the migration of clients from the Credit Suisse platforms into the UBS platforms. So this is very technical, still requires a lot of support and people to do that. And but as we start to do that, we can unlock some cost savings, but also unlock capital savings, funding savings, and therefore, achieving our final targets to achieve 13 billion of savings by the end of 2026. For this year, we do expect half of that being achieved, so 6.5 billion.
Sergio Armati there, speaking with Francine Lacqua. Joining us now is Andreas Vendetti, Senior Analyst for Banks and Asset Managers at Vontobel. Andreas has a buy rating on UBS. Thanks for joining us this morning. So here we have a profit from UBS 3 times what analysts had expected. Andreas, is this UBS returning to its greater glory?
Yeah, it would be nice. Well, actually, the biggest part of the beat versus our consensus estimates came from the non-core and legacy portfolio, where they showed a much faster improvement than expected. And this is something that firstly is lumpy. And secondly, it's not really a straight line development. So there, I think the estimates were most far off. Of course, it's a positive, but I don't think each and every quarter now will see such a very strong performance from the non-core and legacy rundown.
Well, certainly if anybody has form in understanding how to run down non-core assets, that team that's in charge probably do. I'm looking at the cost reduction narrative that Armati just discussed with Francine. The cost reduction target is $6.5 billion, or over 50% from the original target that they had for 2026. So this is classic Armati, which is front load, push the cost cuts in the very, very near term. Is that also a boost this morning?
Definitely. And if you look at Credit Suisse, they also published this morning that the Credit Suisse part of the business still reports 900 million loss, basically because it's a structurally unprofitable business, mainly due to the cost side. And that's why the cost rundown is so important. And yes, they're on track there. And that's obviously also part of what investors like today.
Well, I mean, they cut underlying expenses by 5%, but I guess can it continue if we're looking at something like another $1 billion in those integration costs, to Manas's point? I mean, the trend is good, Andreas, but how long can that last?
Well, you have to see that after legal mergers, which they announced now at the end of this month, they will only actually be able to start eliminating all the duplications which come with 2 very large legal entities like UBS AG and Credit Suisse AG. Because basically you have many, many functions within these 2 legal entities, which now they have double, which they have to keep running double until you have this legal merger, which will happen very soon. After that, you can start cutting actually these duplications. And that's going to be, another big wave, obviously, of cost cuts. Unfortunately, of course, also some redundancies for the people involved. Not really nice, but that's how it is in such a merger.
Andreas Motti also said on the call that they're already accumulating about $20 billion in capital. Now, this speaks to the risk on the too big to fail and the requirements of capital. So the institution is already prepared for, is that a worst case scenario, or is there lobbying between now and execution that could materially change that $20 billion in capital, additional capital requirements?
Yeah. Well, you have to see that this is in part a political process here in Switzerland. And of course, UBS is very clearly doing some lobbying to explain how this looks like. You have to understand that, politicians are probably not very familiar with these kind of topics. They are not bank analysts, of course. So they need to get familiar, there is some view in the political system here that basically, rightly, is you have to protect the taxpayer. That's for sure. On the other hand, there is some view that says the more capital, the better, because the institution will be the safer. And I think here some people do not really see that capital is only one part of the whole picture. There's many other parts. And I think only focusing too much on the capital side is not really the right way. Also because, it's not only an absolute gain of how much capital in absolute terms you need to hold, but also, in my view, a relative game. How do you stand compared to your main global peers? And here, I think UBS already stands in a very good position. Some further increase can be okay. I mean, that's not an issue. However, you could also go too far here. And
indeed, I think that therein lies the very essence of the debate at the heart of Bahnhofstrasse on the street relative to inside the headquarters. Andreas, thank you so much for joining us this morning. Vontobel's Andreas Venditti there with us. And Danny, this plays too. If you go to your T-Live blog, you'll be able to see exactly the narrative from UBS. Motti, to use Motti's language, UBS will advocate a proportionate outcome on the front, and that's how it's being framed. Right. So this is about trying to negotiate, because the buybacks are still in play and the dividend still reigns supreme, and the price to book value of this bank is way ahead.
Well, the issue that Andreas talked about is this is not something politicians typically deal with, that perhaps their knowledge is different than that of Ermati, which I think is also why he's framing this isn't important for us. This is a matter for the country. We are the Swiss bank now. Again, he says this is an important discussion for the country. So he's trying to frame it in perhaps a way that politicians would view favorably.
Listen, it's a tough line to run for Colin Kelleher and Ermati. You've got shareholders on one side who want dividends and buybacks, and you have politicians who simply, they're there to protect the country, and they have their job to do in terms of the argument. It's a hot potato.
Which, by the way, perhaps doesn't look great with wonderful results from UBS and job cuts to come.
It doesn't. Anyway, they're reducing the risk-weighted assets at a pace, and they're ahead on cost-cutting targets. Some of the stories trending on the Bloomberg terminal for you this morning. This is what we've got for you. JP Morgan is starting a new round of layoffs in Asia. The bank said it will cut at least 7 more investment banking jobs in the region this week. And separately, Citi's custody unit shifted to work hours of some staff in Asia to Tuesday through Saturday to align with the US.
Last night at the Milken Institute Global Conference, Elon Musk talked regulation, space exploration, and you guessed it, AI.
I mean, AI might be the most important question of all. The percentage of intelligence that is biological, grows smaller with each passing month. Eventually, the percentage of intelligence that is biological will be less than 1%.
And scores of pro-Palestinian protesters were blocked by the police from getting close to the Met Gala. The Gala is the most exclusive annual event in New York City. The glitterati, they turned out in force. However, the demonstrators were heading towards the venue, the Metropolitan Museum of Art, when they were intercepted by the NYPD. A group had tried skirting the police, going via Central Park, but were met with barricades and threats of arrest.
President Biden plans to denounce anti-Semitism at college campus protests in a speech today. He's going to be delivering the keynote address at the U.S. Holocaust Museum's annual Day of Remembrance. That's at 11:30 a.m. in Washington. The speech highlights Biden's political dilemma 7 months into Israel's war in Gaza.
Coming up on the show, we'll discuss Israeli troops taking control of the Rafah border crossing as it rejects the proposal of a ceasefire.
And BP keeps its share buyback, but overshadowed by a net income miss. All of that to come on your brief.
This is Bloomberg News Now.
News when you want it at the touch of a button.
Another volatile day on Wall Street. We're seeing big moves.
All eyes on Capitol Hill as Democrats and Republicans prepare.
Today's job numbers casting doubt on the Fed's next move. Inflation remains front and center. And that's news when you want it with Bloomberg News Now. Get it 24/7 on the Bloomberg Business app, Bloomberg.com, and anywhere you get your podcasts.
Bloomberg News Now. Context changes everything.
It's the world's second largest economy with a growing influence in global affairs. But geopolitical uncertainties, deflationary pressures, and questions about foreign investment linger. Bloomberg, the China Show, brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China. Bloomberg, the China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
This is a Bloomberg Brief. I'm Manus Cranny alongside Danny Berger in New York. Well, Israeli troops took control of the Rafah border crossing, that area in Gaza, making the first time the army has moved into the area since the war with Hamas began in October. Joining us now is Bloomberg's opinion columnist, Mark Champion. So it looks as if these let's say, cessation of hostility discussions have stalled, and this is an escalation. Is that the right way to frame this move by the Israeli into the Rafah border?
Yeah, absolutely. I mean, what we saw was Hamas saying that there's this agreement, mediated agreement that we've now signed off on. But it turns out, according to at least the sort of purported text that's been published by Al Jazeera, that agreement is very clearly an effort to kind of paper over difference with Israel. Israel was kind of taken by surprise. And the bottom line is that Hamas remains committed to getting a permanent ceasefire, and Israel remains committed to retaining the right to eradicate Hamas, regardless of any temporary truce. So they remain, far apart, as the Israelis have said, and they're already starting their move into Rafah, which is, extremely disturbing.
And there have been plenty of those who have questioned really the impetus behind Hamas agreeing to a ceasefire, whether it's in good faith. Academy Securities writing that some are speculating the announcement is just an effort to avert the invasion of Rafah and, quote, put the ball back in Israel's court. So if the ceasefire works, talks continue to draw Mark. And next we're looking, as we already are right now, of Israel in Rafah, continued strikes from Hamas to Israel at various border crossings. What does the next weeks look like, Mark?
Well, it's going to be ugly, I think. I mean, you know, the first thing that's happened, the first move they made was to close the border crossing at Rafah, which is, they're critical in terms of getting aid and fuel into Gaza. So that border crossing is now closed. And it's likely to remain closed for the duration of hostilities. So, it's the sort of improvement that we've seen recently in terms of the amount of aid getting in with the opening last week of a couple of crossings in the north. That is not going to remain improvement. It's just going to be, an effort to keep the level of aid that's getting in, which is, just sustenance levels, really, to stay. And then you're going to have, a continuing problem of more than 1 million people who've moved to Rafah to seek safety. Only the Israelis have been trying to evacuate some, 100,000 they asked to leave from eastern Rafah. We'll see how that plays out, but it's quite likely that we will see a repeat of what's happened before, where these evacuations come rather too late and a lot of civilians get caught up in the crossfire.
Hey, Mark, we appreciate your time this morning. That is Bloomberg opinion columnist Mark Champion. Okay, now let's turn to the oil market and the big oil majors. BP is maintaining the pace of its share buyback. Aramco is also keeping its $31 billion dividend, a payout to the Saudi government. Joining us now is Bloomberg's Will Mathis. Obviously, everyone wants to know about the dividend. So, Will, BP's keeping it going.
Yeah, the big thing right now for BP is the buyout, which they maintain. They had a target for the first half, which they reiterated. They're going to meet $3.5 billion of buybacks. And that's really key for the company right now, that they can show their shareholders that there's money to come from holding these shares, and try to lift that up and get more competitive with, Chevron and Exxon in the U.S. that trade at a much higher multiple.
Well, I think when you have a look at Aramco's dividend policy, I mean, this is where the world salivates at the idea of another slither of equity being released from Aramco. And all eyes are on that policy, that dividend policy. How is that evolving? How would you contextualize that relative to the global majors?
Yeah, well, I think that while BP and Shell have their shareholders that they need to keep happy with buybacks, Aramco's main shareholder also needs to get paid out. Saudi Arabia has big ambitions with building a new city in the desert, which they need a lot of money to be able to do, even though they've recently scaled back those very expensive plans. And Aramco, maintaining that dividend to the Saudis is critically important for those national goals.
Yep, well, $31 billion is a chunky payout, and the break even that they need for some of these projects is rising incrementally every time we touch on the story. Will, thank you very much. Will Mathis there, covering the oil majors and the dividend story right here on Bloomberg. Good morning from New York. What a beautiful day.
Names in tech are on Bloomberg.
There is a natural tension between the need of a supplier to scale
and the need of the customer, the car maker, to differentiate, try to make something that is unique.
We have a long-term partnership with Tesla, and it's still strong, but Tesla is not the only partner that we're seeking, and we want to diversify and really make the EV market in general stronger and sustainable.
All these devices becoming smart devices, they all need a brain inside that helps them learn what to do. That brain inside is ARM.
I'm believing the next user experience is going to be based on Gen AI on the phones. We're optimistic that we could start to see devices as early as this year.
Our job is to create index products and then to be the listing exchange for those index products that allow investors to invest in all sorts of tradable instruments, including now Bitcoin.
Nobody covers technology like Bloomberg. Context changes everything. From the world of politics to the world of business. Every weekday on Bloomberg TV and radio, hosts Joe Matthew and Keely Lines deliver news, insight, and analysis from and about politics' biggest power players.
The president has been clear that is non-negotiable.
I mean, this is going to be an ugly, ugly year.
Balance of Power, live around the world every weekday, only on Bloomberg Television and Radio. Context changes everything.
It's your Bloomberg Brief. Danny Berger and Manish Cranny in New York are like, all right, let's get to some of the front page news, some of the things that are making headlines around the world, Manish. So first up, I've got the New York Times. So they basically are saying, look, because the labor market is improving, the outlook for Social Security and Medicare got a little bit better, but it is still grim. This is from their annual reports. It's released on Monday, and basically saying that Medicare will be unable to pay all of its hospital bills starting in 2026.
Okay, I mean, that is a huge fiscal issue. One major issue making TV screens around the world are the scenes coming from the various universities around the United States. Columbia University is just the most recent. They've cancelled their main graduation event. This is after weeks of tumult on the campus, Danny. Protests against the war, focusing on smaller scale celebrations. This is what they're going to pivot to. I mean, just think about it. USC's also cancelled their main ceremony. So this really is beginning to have a material impact on the campuses.
Right. We also learned earlier this morning Biden's giving a speech at the Holocaust Memorial talking about what he calls the anti-Semitism on college campuses. Finally, Manish, we have Xi, who is still in France. This is the last day of his two-day trip. Apparently, they're heading to the Pyrenees today, where Macron holidayed as a child, so that's nice. Here's the line for me. This is what she said. We oppose those who use the crisis and throw the responsibility on a third party and call for a new Cold War. Talking about Beijing's support for Moscow, that message is squarely positioned to Washington, saying don't use this as an excuse for new Cold War.
He also talked about actively seeking peace and calling for a ceasefire during the Paris Olympic Games. But von der Leyen's exchange, where she said they had an honest and robust exchange, this was behind closed doors, talking about China's overcapacity on electric vehicles. That's well known and well covered. But the unsustainable imbalances that Europe would not waver from taking tough decisions.
By the way, Macron, I think, got his win on brandy. He said that she doesn't want preemptive taxes on cognac. So, you know, success.
Louis Vuitton will be happy.
it like moving from the East Coast, where everything is finance and money, to the West Coast, where everything is technology? Did you fit in right away? And did you really know how to use all the computer things that they give you to use?
So it was pretty fun. There were plenty of times where I would sit around in meetings and literally I would be Googling terms. And at one meeting, Larry Page actually caught me Googling terms, and he kind of pointed that out to other people in the room, which was a little embarrassing, but I figured there were some things that I could do that they couldn't do. And so it was a learning curve. And my dad always, he taught me at a young age a term that I've used constantly with my teams. He said, in his lab at Stanford, if a physicist could not define a quark in under 30 seconds, they didn't know what they were talking about. And so I use the quark test all the time. If somebody's rambling on and they can't get to the point, they probably don't know what they're talking about, they fail the quark test. My finance team knows this quark test. And at Google, I'm working with amazing computer scientists, so they never fail the quark test. They can explain things really clearly, which shoots you up the learning curve.
But did you understand what they were talking about from the beginning, or did you have a special tutor that's taught you technology? Or did you
I had actually run tech banking and took Google public, so I had a little sneak preview.
In a multi-trillion-dollar industry, there's a lot of ground to cover.
Bitcoin ETFs rubbing elbows with the big dogs.
This frenzy has engulfed the entire world.
We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, only on Bloomberg.
From our global headquarters in New York, I'm Danny Berger alongside Manish Cranny. Let's set your agenda.
Israel's troops take control of the Rafah border crossing as the ceasefire talks drag. UBS shares soar. The Swiss bank returns to profit as wealth and investment banking beat. And up next, the earnings from Disney may post another subscription gain. That is before the bell today.
The labor market is cooling and surely inflation will follow. That seems to be the narrative that this market is grabbing onto. But can you trust it? Equity market, 3 days of gains, best run since November, up again this morning, just barely though, less than 0.1%. You've also seen the gains come for the Treasury market. We are now 20 basis points lower on your 10-year yield over the past 4 days. That is the biggest drop down in yields since we've seen in February. The front end, though, that seems to have run out of a little bit of steam. The gains there started to dissipate yesterday. Finally, dollar versus yen. The pressure is still upwards on this currency pair. Dollar stronger by about 1/3%. First, we heard from Conda this morning, and then we heard from Ueda saying that he had met with Kishida and said that we are monitoring the weakness in the currency to see what impact it might have. Manis, that's a comment we have heard many times, but Conda saying, we won't intervene if markets are behaving orderly. If they're behaving orderly, I mean, you could argue this is based on fundamentals. Seems like an invitation for the yen traders to come in and continue to beat it up.
Well, we know a quasi-parameter around what is orderly, which is a move of more than 4% over a very, very short period of time, which was part of the reason why the market believed that they had intervened. You talked about the rates move, and this is fundamentally the challenge for the Japanese. Even though short-dated rates, I'm looking at the short end of the curve, you're looking at the 10s, we've got a pretty big auction slate this week. If you look at that movement, at one stage it was like 28, 29 basis points for 2-year notes. We're back at a drop of 18 basis points over the past 7 trading days. That rate gap is ultimately the headwind for Japan.
No, but it's such a good point because there's so much volatility in that rate gap. When you get these kinds of moves in the bond market, a bond market that's acting more like corporate credit or acting more maybe even like the stock market, you're going to get that volatility in the yen, and it's fundamentally based. So to say, okay, we're not okay with orderly moves, what happens when non-orderly moves are based off of fundamentals?
Well, it's going to take a little bit more than $60 billion that they threw at the wall last week to change the mind and to take the carry trades off the table, which hasn't happened. And that's what Kit Duke said 24 hours ago. The carry trades are still live. They're still out there. They've not been taken out. And until that happens, you don't have a catharsis in this market.
The shorts are still alive and well. One thing that the Japanese, that the MOF has going for it, is the optimism that the Fed will cut. That is growing. And we heard from New York Fed President John Williams and Citadel CEO Ken Griffin. One of them has a say on policy, the other one does not. But both spoke about the trajectory of what this year looks like.
as the data come in, hopefully we'll be moving in the direction we want to see, both on inflation and in terms of restoring balance to the economy, and then we'll make our decisions based on that.
If they haven't cut in September, they're likely to cut in December. Again, there's still a question of, will inflation actually decelerate enough by then?
The land that dreams are built on, rate cuts. It's now Aaron Kennan, co-founder and CEO at Clear Harbor Asset Management. There's Ken Griffin. He's keeping the dream alive for December. The rates market has really had a new propulsion, hasn't it, Aaron, over the past 7 days, right the way across the curve. But it is the short end, 2 years, sub 5%, which has injected a new sense of pro-risk narrative, and rate cuts will come. Good morning.
Good morning, Manus. Yeah, absolutely. Certainly, that was the lead. I apologize. So certainly, when you look at what just transpired over the last, call it, week, the labor data coming out of the U.S. on Friday came in weaker than expected. We had the employment cost index, which was significantly softer than anticipated. You look at other important employment surveys, which, of course, the Fed is looking at to try to gauge whether or not they're going to hold for longer, possibly raise rates, which I believe is probably far less likely than them cutting rates. The quits rate is trending downward. The conference board data is suggesting weakness on the margin on the employment front. So this all feeds into the narrative that maybe the Fed is going to be proven right in 2024, and that we could actually see up to 3 cuts this year. I think, going into last week, we were talking about 1, and now we're talking about 2, where it's a coin toss for a cut in July, and it's right now currently priced in at 100% odds of the first cut coming in September.
Well, Aaron, you write that the risk reward for bonds here looks more compelling today than perhaps any time since the financial crisis. But where on the curve, Aaron? I can understand the front end, given what you're just saying, given that there could be more than 2 cuts this year, that there could be 3. But what about the long end? In a world where we've started to debate, is long-term inflation really coming back down to 2%?
I think if you just look at the real rate, Danny, you look at that 2.35% 10-year break even on the Bloomberg terminal this morning, and you look at where 10 years are, and you have well over 200 basis points of cushion there. Throughout the post-financial crisis period, we didn't have that sort of cushion. And so, what I was referring to was, if you take a look at, where we were pre-financial crisis, a couple of 200 basis points over the 10-year wasn't abnormal. And we're back to that point that we haven't seen in over 17 years. And I think it's quite compelling on the margin. I think on the curve, you need to be thinking about incrementally moving your duration targets a little further out the curve, and that just provides you with incremental protection in the event that the economy does slow down more meaningfully, and maybe the equity market experiences some level of indigestion. The 10-year Treasury, just when you look at the sort of the value of every 1 basis point move, is going to provide you with significantly greater protection than the 2-year Treasury. And so we just need to be mindful of that. So if that means moving from 2 to 3 years or 3 to 5, it just depends on what your mission and mandate is as an asset manager. But we would recommend making a gradual shift out the duration curve.
You're happy with the amount of term premium. I know it's dissipated relative to, we talked about this a couple of times where it was before Christmas, but you're happy there's enough premium in there, there's enough term premium in there for you?
Absolutely. We haven't seen these sorts of break even relative to the nominal rate of interest for well over 15, 17 years, Manus. And so we think that there's an opportunity there to sort of think again about that balanced portfolio where the foundation remains equities for most high net worth, ultra high net worth clients. But the fixed income piece is now, you're able to move away from money markets at well over 5% and think about the future of where rates are a year or 2 years from now.
Yeah, Aaron, but how many people this year have said it's no longer the time for cash? We got to get out of that, but it's giving you 5%. Warren Buffett even says he's going to have easily $200 billion by the end of this quarter. How difficult is it to convince people to get out of this thing? Again, when you're getting 5% by just sitting in a risk-free asset.
Well, Danny, I think that commentary that you just articulated so well is really a reflection on where valuations are in the equity market right now, less than with the opportunity set in the fixed income market, in my opinion. Warren Buffett has never been a fixed income manager. And so when you think about like the S&P 500 trading at 20 times forward PE multiples when it has a 25-year average of closer to 16 times, we're at the top decile of valuation. Now, we also know valuations can run high for a long period of time, so it's not a great timing mechanism, and we're very mindful of that. But then if you look beneath the equity market, Danny, if you remove the sort of magnificent seven, the equity market's trading at about a 16 times multiple, and that looks reasonably attractive. And there are opportunities when you look beneath the hood of the mega caps, which now represent a third of the S&P 500.
I'm just wondering then where you stand. Danny and I were sort of chuckling to ourselves. We've got Luca Paolini. He's on the investment committee over at Pictet. They run a few dollars as well. U.S. exceptionalism is overrated. Now, we're sitting here in the United States of America. It's easy for a man sitting in Switzerland.
It's sacrilege.
It's sacrilege to talk about U.S. Well, they're not the only institution. You've got Pictet and you've got Amundi. To be fair, both are in Europe, so it's a different perspective. Is U.S. exceptionalism challenged at any level? Do we need to begin to challenge our own thinking here?
Well, it's difficult for a man sitting in the Constitution state here of Connecticut, too, maybe to be unbiased. But I would just say that we have for decades, for 100 years, particularly at this current moment, when you think about our technological ingenuity, when you think about the opportunity to sort of leverage artificial intelligence, when you think about companies that are still critical to healthcare, both home and abroad, whether it's diagnostics. And, there's so much happening in a very positive way here in the United States. And when you think about the dollar in the depth of our fixed income markets, the global reserve currency is, in fact, still the dollar, although there is an argument that I can easily make that it is on the margin waning. And that is of concern. It should be of concern not only to Americans, but of people in the West generally.
Well, just for a bit of context for that from Luca, this is about too much optimism about U.S. growth and too much pessimism about the rest of the world. And I think therein lies the clarity. So forgive me for not giving you that context around
okay,
that.
Yeah, great. I mean, Manus, I think there's something to that. When you look at the growth picture in the U.S., I would argue that we're decelerating on the margin. We just saw services PMI data hit a 4-year low last week. I mean, there's evidence that the consumer savings rate is, essentially run completely out of gas. You look at the credit card utilizations are up. You look at auto loan delinquencies in the United States are up.
Yep.
But, monetary policy does work with a lag. You have the average mortgage rate of 3.6% in the United States, and 95% of mortgages are 30-year fixed rate mortgages. So it takes time for this high rate environment to really impact the consumer.
Yeah, but to be fair, Aaron, it is these small pieces of anecdotal evidence, and then you also get evidence the other side, which I think is what makes this market so difficult to trade in right now. Really appreciate your thoughts. Aaron Kennan of Clear Harbor Asset Management, thanks so much for joining us this morning. Okay, coming up, back to the earnings. Disney is going to take the spotlight. As Manus would say, is it a whole new world?
Whole new world.
He won't sing for you, though.
Nope.
We'll try to convince him. Okay,
Nope.
That's up next.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. How has that shaped your strategy for the bank? Is this a new normal? Is this like a catalyst? Do you think we're in a new phase for dividend policy overall? That's a great question. I'm Francine Lacqua, and this is The Pulse, every weekday only on Bloomberg.
Today's CFOs are reshaping the C-suite. Bloomberg's Chief Future Officer shines a spotlight on these dynamic leaders.
It's an incredibly fun job, for sure.
We're in the business of leading beyond the numbers.
To me, teamwork is key. You need to identify opportunities and push people.
It's not about how to say no, it's about how to say yes.
Their impact goes far beyond the balance sheet. And on Chief Future Officer, they focus on much more than just revenues and margins.
Today's CFO has to be much, much more than a bookkeeper. I talk more about culture today than I talk about numbers.
It's not just about debits and credits and digits and dollar signs.
It's a lot more than the profit today. It's building the future of tomorrow.
Get passion, perspective, and more from the Chief Future Officers of some of the world's most influential companies. New episodes this summer, only on Bloomberg. Brought to you by Workday.
It's Bloomberg Brief, Danny Berger and Manish Krani in New York. So Disney Manish is expected to register another increase in subscribers to its streaming service when it reports earnings before the bell today. It's the first report since Disney successfully fended off a high-profile proxy fight with activist investor Nelson Peltz. Let's get the details and bring in Bloomberg's Alex Webb. So subscribers in focus, Alex. We've seen Netflix, for example, surprise massively to the upside. So how high is the bar for Disney today?
Well, actually looks quite low. The company had said in February that they expected to add between 5.5 and 6 million subscribers. The market's actually looking for 4.7 million subscribers. So it seems as though if they just beat the market's expectations and don't meet their own targets, maybe they'll be rewarded. But the thing is, that's still half of what Netflix is doing. Netflix added 9 million subscribers in the quarter. So clearly, expectations for Disney Plus, which at one stage had really been growing a lot more quickly than Netflix, it has slowed. The change in the content investment has also meant that it may be harder to add new ones, but the bar does remain quite low.
So if we look at this report, it's going to be the first for Bob Iger since he defended against the activist investor Nelson Peltz. You know, there's a weight of expectation in terms of assessing his turnaround plan. There he is in his resplendent glory. Has he delivered? Is he delivering enough to thwart activism and another assault?
Yeah, I mean, we're looking at Bob Iger 2.0, where he's talking about perhaps breaking up the company in a way that wouldn't have been conceivable 5-6 years ago. The massive cutback on content spending, I think in the order of $3 billion, that looks like it's going to be delivering a little bit more profitability. I think the market's looking for just over 1% growth on an operating profit level. So, it's not gangbuster numbers just yet. I think the really key thing we're going to be looking at now is Pixar, right? That's the big release coming up in June. They are slightly retrenching when they think about whether they're going to do as many sequels as they previously did. They slightly exhausted Marvel and Star Wars. Pixar is really the place where they come up with new ideas. If that's able to have an impact, that augurs well for what happens subsequently. I will absolutely watch Inside Out, too. There's no doubt about it. I will be the first one in the theater. Love that movie.
With popcorn?
With popcorn. Why not? The whole shebang. Yeah, I support our local theater. Alex, if we can shift a little bit. Okay, so Apple, the Wall Street Journal has this story that they are developing their own chip design. The best part of this, perhaps, is that they're calling it Project AC/DC internally, Apple chips in data centers, because Apple is just so cool. Investors have been lamenting, Alex, that Apple is behind on AI. Does this set them ahead?
Well, I mean, all of their competitors, all of the big tech companies are at least developing their own AI chips. I think often with these things, I would suspect,
people might disagree with me on this, but this is actually about negotiating power with NVIDIA, right? That NVIDIA, one of the reasons that its stock has been in such a tear recently is not just that they are selling more chips, but the chips they are selling, they've been able to massively womp the price up on. And so that is driving a lot of the profitability there. The reason then that you would think about developing your own is to give you a little bit more negotiating power with NVIDIA. And so I would suspect, of course, there are things this helps them do in terms of their own AI capabilities, but Apple is very canny when it comes to negotiations, and I'm sure this is a part of it.
Now, it was 2010. Steve Jobs was in charge, and he said PCs are going to be like trucks. And of course, this was about the invention of the iPad. I've had a few, and I've got to say, I'm at the juncture of where I actually quite fancy an iPad. I haven't had one for a long time. I want the keyboard. I want the whole thing.
Little pen thing.
So the marketing's working.
Yeah, look, I'm sorry to evoke a cliche here, but you could say iPads, I've had a few, but then again, too few to mention, because the thing is with iPads is you don't refresh them as often as you do an iPhone, right? And so that is why you don't see delivering anywhere near those sort of numbers. iPhone sales actually peaked at around $31 billion a decade ago. They've never hit that number since. So it's trying to find ways of getting people to refresh their iPads more regularly. We're going to see a few updates to the iPad Pro, to the iPad Air. That's what we're expecting today, according to our colleagues Mark Gurman's reporting. There'll be OLED screens in models that didn't have it before. Of course, an updated chip. It's hard to find those reasons to upgrade, though.
I don't think I need all those extras, Alex. I just need, I just need the keyboard and sort of just something that,
So the marketing hasn't worked well enough.
Well, when it comes to matters of style and substance, we know where I fall. It's style over substance every time. Alex, let's see how the great reveal goes. Great for joining us this morning. That is Alex Webb on the Apple story. Well, Boeing is facing a new investigation from the U.S. Federal Aviation Administration. The latest probe involves incomplete inspections of its flagship 787 long-haul jetliner. Sid Phillip is with us now. So this is another blow, not just to reputation, but about trust in the 787 program, isn't it?
Yeah, this is another blow for Boeing in terms of they're already under scrutiny from the regulators about the 737 MAX, and now the 787 is also in the crosshairs. And that sort of follows a whistleblower saying that essentially the plane maker didn't do sufficient testing and possibly falsified data on tests about the wing being joined to the fuselage. And so it's fairly significant and serious for Boeing. And they've said so far that it doesn't affect the in-service fleet, but the regulators have asked Boeing to come up with a testing and a sort of check mandate for that. And that's really going to be key in how the sort of in-service fleet performs, as well as new delivery. So we're still waiting for details from Boeing on what that means for deliveries of aircraft going forward as well on the 787 program.
Sid, I realize that Boeing's desires to go to space is not as core of a business as it is for their airlines, but we have the Starliner that was set to launch yesterday with the theory basically being this was necessary for Boeing to prove that they could take humans to space. And of course, the joke would be, do you trust Boeing taking you to space? Well, we learned the launch didn't happen because of a faulty air valve. I mean, what does this do to the image of Boeing? Whether or not this is really crucial to them, Sid, this is a problem.
It is, and so the ULA launch, which is Boeing's venture with Lockheed Martin, was meant to take off yesterday, and hours before the launch, they had scrubbed the launch. And this is a program that's, again, billions over budget and has been sort of key to Boeing's ambitions and hasn't quite delivered on what they want to achieve. And so it's just another program that Boeing is struggling to deliver and get it off the ground, literally.
Hey, Sid, appreciate it. Appreciate that pun, too. I'm sure we'll have you back again another time shortly for another Boeing story. Bloomberg's Sid Phillips there. Okay, coming up, Manus and I are going to set you up for your trading day with some of the events and your stocks to watch. You're on Bloomberg.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
This is Bloomberg.
DOJ or other authorities.
Could face bigger challenges next.
Was going to keep Great World Cup. This is a 3
as the economic picture.
Covering the intersections of Hollywood, Silicon Valley, and beyond.
Welcome back to Bloomberg Brief. Danny Berger and Manish Cranny in New York. Let's get you set up for your trading day. Disney will be reporting its second quarter earnings before the bell. And then Minneapolis Fed President Neil Kashkari is going to be participating in a fireside chat at the Milken Institute. That's at 11:30 a.m., where we already heard from other Fed speakers. Lyft and Reddit, they'll also report their earnings today, Manish, after the bell.
With some pretty big moves for you as we kick in here. Palantir falls. The market appeared unimpressed by the company's outlook for its annual sales, and the stock, it did triple in the past year. Lucid, look at this, down 8.52%, a wider than expected loss to the start of the year, and the company contends that there's production challenges and uneven demand for, you got it, high-end electric vehicles. I mean, that is a bruising on that. Disney up over 1%. What are the subscriber numbers going to look like? Will they register another increase in that number on the streaming service? A whole new world, my favorite tune.
You had to go there, Manis.
I had to go there, but I'm not singing it. Go on.
You didn't sing it. It's such a disappointment. We all want a little bit of karaoke. Okay, I'll move on the subject for you then. A quick check on your bond market. U.S. 10-year yields come in by about 2 bips this morning, trading at 446. Manis, over the past 4 days, 10-year yields have come in by nearly 20 basis points, the most since February. It is a narrative that the labor market is looking softer. Surely inflation will follow.
I love what Morgan Stanley wrote yesterday. It's just a straightforward, good old-fashioned, no mint in your words. There will be a rapid deceleration in PCE. Buy bonds. It was almost like a clarion kind of call. But of course, they gorged on the 6-month bills yesterday rather than the 3-month bills, because these rate cuts are back in the market. And we've got a little bit more paper today, $58 billion of threes.
But I think that's the important thing. If you're buying, where on this curve do you buy? We were talking to an asset manager moments ago who said maybe it's not duration, because if long-term inflation is settling higher, maybe you just want to be playing in the front end.
Yeah, they'll all come on and they'll say belly of the curve by 5s. And that's it from Bloomberg Brief. The surveillance team can tell you on the curve.
We're operating in a very volatile environment. So JetBlue has a very large presence here in New York, and there are air traffic control challenges. And so we've had to overinvest in hiring excess crew members and building flexibility into our planning process. And so over time, we hope to wean some of those investments back as the operating environment around us stabilizes.
We made the decision early on that we were only going to invest internally on key differentiating technologies, and clearly the powertrain is the key differentiating technology. So our investment is a recurring investment with respect to the powertrain team, the battery team, which is part of it, the engine team, the electric engine team, which is part of it. And we also have a lot of non-recurring costs with the other components because we're not developing those internally. We're using the existing aerospace defense supplier base for most of the other components.
We invest a lot in the offices, that you feel home, that you can actually be at your best yourself, and people work very differently. We take a lot of input from the sports world, actually, the athlete spirit, right? Building a sports team that can perform at the best, but also talking a lot about the explorer spirit. How can we really tap into new things, continue being disruptive? We have 80 different nationalities at On. It's very important to have a diverse team because we have a very diverse landscape of customers.
Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything. Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
Great question. Great question. Best question I get all night.
Bloomberg, top experts, great questions.
We've moved from an environment where the data was too hot to starting to cool down.
We know we are restrictive. The question in everyone's mind is just how restrictive.
What is really remarkable is that the Fed endorsed high for longer, but markets are holding up.
We haven't gotten the clearest communication from the Fed. You know, we know that they want more confidence, but what is more confidence? What does that look like?
We've just been so fixated on inflation and the Fed that we're missing this real turn. We could see this gap back to hard landing time.
This is Bloomberg Surveillance with Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning, good morning. For our audience worldwide, this is Bloomberg Surveillance. Your equity market is doing okay, just about positive on the S&P 500. The politics of dollar yen. Won't spend too much time on that, just briefly. Dollar yen positive by 0.4%. That is a weaker Japanese yen. The BOJ governor meeting with the Prime Minister today, saying he'll closely monitor the impact of a weak yen on prices. He'll be watching it, Bramo. Secretary Yellen is as well. Intervention to be rare and consultation to take place, and then the Japanese official snapping back. If the market is functioning properly, of course there's no need, but a suggestion there that maybe it's not.
All of this goes together to say a lot of people who are bearish in the yen are getting emboldened that maybe they cannot do intervention in the near term in the same kind of way, and it won't be as effective. I do wonder, though, how much Janet Yellen is actually going to put the pressure on Japanese authorities versus just simply maybe there is a sense they've kind of used up the little ammunition they're willing to spend.
Well, two things she said. She said, one, consultation should take place, and then she said she called the reported Japanese action a rumor, which makes you think the Japanese did not call 202. They did not call Washington to ask and to let them know that potentially, hey, we are going to make a move, we are going to intervene.
A dollar yen 154.61, big swings over the last week. We saw 160 2 Mondays ago, all the way back down to something like 152 to start the week, somewhere in between at 155 at the moment. A much more important story developing in the Middle East, so let's focus on that. The latest out of Israel and in Gaza as well. This is what we know. Israeli troops taking control of the Rafah border crossing area in Gaza this morning. Hamas saying that all aid flows from Egypt have stopped. This, of course, coming after Israel told residents in parts of eastern Rafah to leave immediately. Lisa, I think we're all watching this play by play, hour by hour over the last day.
Especially because Hamas came out and said that they agreed to a ceasefire deal that had put forward by Egypt and Qatar. Israel said that they are not accepting that it was different from the one that they put forth. Then there was reporting, and Anne-Marie, I know that you have some too, about the idea that maybe it wasn't different by that much, which raises the question, is this a Netanyahu that wants to go into Rafah no matter what, period, full stop? And it really raises the question, is a ceasefire right now possible?
Well, one thing that we should note today is that the fact that even though Israel said they do not accept this current agreement on the table, they are still sending mediators to Egypt. We still know that Bill Burns, the CIA director, is in the region, and the fact that Israel says they are still seeking to find an agreement, potentially they're using what's going on in Rafah as a point of leverage.
We'll catch up with Norman Rule, the senior intelligence official, the former senior intelligence official in the United States, in just a moment. That conversation about 10 minutes away. Let's start with a broader price action on the S&P 500. 3 days of gains could become day 4. We're positive by 0.05%. What a run in the bond market, Lisa. Yields falling once again. We're down 2 basis points on a 10-year, 446.51.
What's interesting to me is that the rally has continued on the long end, but on the short end, it seems to be hitting sort of a resistance point. In other words, it's not like people are saying wholesale, let's go back to 7 rate cuts for the Federal Reserve because they seem to have a bias toward cutting. At the same time, what we heard yesterday from both John Williams as well as from Tom Barkin of the Richmond Fed, basically endorsing Fed Chair Powell's view. They basically came out and said, okay, the next moves are cuts. We aren't there yet. Maybe rates where they are will be having a long effect that really will come into play later on. This isn't exactly a hawkish type of talk from Fed officials.
All the flexibility, to Lisa's point, seems to be at the long end. Over the last few days, at least, we're down about 5 days now. 5 consecutive days that 10-year yields are falling. Incidentally, the longest streak going back to August 2023. It's been a while since we've seen this consistent strength over the period of 4 or 5 days. Coming up over the next hour, we'll catch up with Sharon Bell of Goldman Sachs as equities look to build on a 3-day rally. Former senior intelligence official Norman Rule as Israeli troops take over a key Gaza crossing. And Simon French of Panmure Gordon with global bonds gaining on inflation optimism. We begin with our top story. US stocks coming off their 3-day winning streak, the best 3-day winning streak back to November. Sharon Bell of Goldman Sachs saying this: the rise in the relative size of the US equity market has reflected the dominance of the US economy. Sharon joins us now for more. Sharon, a question we've been asking on this program over the last 24 hours, and good morning to you, is how much longer that dominance can last. How are you thinking about that now?
Yeah, I mean, the US market's just been phenomenal. The size of the European and US markets weren't that different in 2007. The US market was still bigger, but it's now 2 or 3 times the size of the European market. Absolutely dominant in terms of the economy, not just the economy, the star companies that we're all talking about, the earnings, the margins that US companies have produced. I think we're not going back to where we were in 2007, but the US has had a very, very long run of dominance. It's also had a very strong cyclical path over recent months. In fact, that's the reason many people have pushed out when they expect the Fed to cut rates. I think cyclically the rest of the world will do a little bit better from here.
Is that economic dominance reflected in the market action that we've seen over the last month? Are you beginning to see maybe some of that spread close?
Yeah, a little bit, absolutely. We've seen the Chinese stock market do well. We've seen the UK stock market do well, which has been a laggard in recent years. We've seen markets globally do a little bit better as you've had a little bit of a cyclical recovery outside of the US. So the US was the one that sort of outperformed on every single economic metric really through this last year. The rest of the world has been lagging, and I think that's catching up a little bit.
So there's just, to push it forward, a question of how much have we already brought forward some of this better outlook in Europe in equity markets? In other words, have we already outperformed as much as we're going to outperform the U.S. going forward, given the fact that so far European equities, in particular in certain bright spots in financials, have done much better than most of the same sectors in the U.S.?
Yeah, I think that we brought forward a little bit of it. Obviously, the market tends to pay for things 6 months before they happen. So I would argue, yes, the market's already reflecting some of the cyclical recovery, but you've still got this huge valuation gap between the US and Europe. It's closed a tiny bit, but not that much. And not only have we got a valuation gap, we've actually upgraded our sort of top-down macro view of earnings from Europe this year. As you've seen the first quarter earnings season do reasonably well, as you've seen oil prices rise through most of this year, as you've seen the euro and other currencies weaken versus the dollar, all that's actually good for European earnings. So a bit better earnings and the valuation gap, not closing, but narrowing a little bit, I think would help to see a bit more outperformance for the rest of the world.
Sharon, how much do you think that also the tailwind of potential ECB rate cuts will also boost the euro region more than people are currently factoring in?
I completely agree. I think there's a good chance that the ECB now goes and the Bank of England before the Fed. The Fed, we still expect Fed rate cuts this year, but a little bit after we expect cuts in Europe. So I think Europe going ahead of the Fed will be really the first time they've done that. It will be a quite big Rubicon to cross, and I think it will get people a little more excited in European markets seeing that policy action.
What exactly in Europe, Sharon, do you like outside of financials?
Yeah, I mean, financials are a nice area because if rates stay a little bit higher for longer generally, they'll do well. But it's not just financials. I think there are other pockets in Europe which are pretty good value versus the US. Healthcare and tech, for example, are sectors which are growing in Europe just like they are in the US. Similar growth, if not, in fact, better over the next couple of years, but valuations a little bit below what you see in the US. So I think there are a few areas. Energy is another area in Europe. Valuations are a big gap to the US, and these companies are buying back shares, giving money back to shareholders, really a huge amount, sort of around 10% return to shareholders, just from buybacks and dividends from the energy sector over this next year. So I think there are quite a few attractive sectors in Europe, either because they've got good growth relative to their US counterparts, but on a lower valuation, or alternatively, they're just extremely cheap and giving you back the money in share buybacks.
Do you think we've seen the peak of US exceptionalism? Or is it just that the rest of the world is starting to catch up?
Oh, that's a great question. I don't think US margins are going to collapse, or the European US growth is going to collapse, or indeed Europe will catch up in terms of GDP growth to the US. I think all those gaps absolutely exist and will continue to exist. But I think how they're priced at the moment is really extreme. So it's not so much that I think that the US will stop being exceptional. I think it will have very, very good growth. It's just I feel that's all very, very priced. And that the rest of the world can catch up a little bit on some of that exceptionalism.
Sharon, can we talk about margins, where you see pricing power at the moment? We've been talking about where there is consumer strength, where there is pricing power, and maybe for some companies they have to defend margins by cutting costs because that consumer price tolerance has basically tapped out over the last few months. Where do you see some of that taking place?
Yeah, it's interesting because there's been some profit warnings, weaker earnings figures announced by US consumer discretionary companies, in particular in this last month or so. We've seen a little bit less, I would say, by European companies. And I think this reflects a slightly different dynamic in Europe, where in Europe, the stock of savings is still extremely high, where Europeans are starting to see positive real wage growth, which they haven't enjoyed for quite some time, as inflation comes down, as energy prices that you're actually paying in your utility bills are starting to come down. So all of those things is helping the consumer in Europe. And in terms of sort of companies and their pricing power and their margins, we feel, I mean, if you look at the earnings figures for the first quarter, actually margins have proved more robust, more sustainable than we expected. That's one of the reasons we've upped our earnings forecast for this year. That all being said, I don't expect a huge expansion in margins in Europe or the US over this year or next year. I think margins are already very high, but companies will probably be able to maintain them.
Sharon, bear with me for this, but I'm trying to always understand how some of the main stories of a given day really factor into the bread and butter of what companies do every single day. Xi Jinping visiting Emmanuel Macron, talking about avoiding a new Cold War, basically trying to butter the pan to make sure that China can sell goods in France. How much does that pressure margins in European companies? Is this something that actually factors into the bottom line in the near term?
Yeah, it's tricky, isn't it? You know, if you ask most CEOs or executives of companies what their biggest concern is, they'll talk about geopolitical risks. So seeing things like this and seeing leaders meet is absolutely crucial for companies, I think, to give them better confidence. In terms of sort of near-term margins, I think the big concern is that globally we are sort of de-globalizing in a way. We're becoming much more regional in the way that we're focusing things. Companies are having to sort of replicate costs. They can't produce things cheaply in Asia and necessarily export them to Europe, etc. They're trying to replicate costs in Europe or in the US or elsewhere because barriers to trade are going up. Geopolitical risks are rising. We saw the problems with supply chains after the pandemic and the difficulty if you didn't have more local production. So sort of costs are generally rising, and that is having an impact on margins. You won't see it quarter by quarter, but I think generally, yes, that's one of the reasons I don't think margins keep expanding from here, is because costs are generally rising, and some of this is to do with localizing, and some of that is geopolitical risk.
Sharon, wonderful to hear from you. Sharon Bow there of Goldman Sachs. Just finally there, a word on Xi visiting Europe. I find this meeting to be absolutely fascinating. I'm surprised it's not been written more about, to be honest with you, across the planet. First of all, you go to France, where you believe there might be an opening with Macron to take on the United States.
Correct.
That's the first stop. The second spot is basically to make the point on the 25th anniversary of the deadly NATO bombing of a Chinese embassy in Belgrade. You're not going to Serbia for the sake of it. You're going for that very reason, to remind the Europeans of the mistakes led by US forces.
This is a deliberate effort to try to widen the divide between Europe and the US. This is trying to put a wedge between that relationship and say, you're throwing your weight behind them. Why? What have they done for you? And oh yeah, we can bring cheap goods here, buy our stuff. They're trying to create a distinct foreign policy and economic policy between the US and Europe. We'll see whether it's effective.
Making an absolute statement when he goes to Serbia, writing in local language today, writing a letter to the Serbian people saying 25 years ago today, NATO flagrantly bombed the Chinese embassy in Yugoslavia, killing 3 Chinese journalists. This we should never forget. He is clearly making a statement, and in Belgrade, what you see is not just Serbian flags, but Chinese flags as well for his visit.
They're being pretty transparent about it. Much more on that story a little bit later. Equity futures on the S&P, just about positive on the S&P 500. Let's get you an update on stories elsewhere. Here is your Bloomberg Brief with Danny Berger. Hey, Danny.
Hey, John. In a speech today, President Biden plans to denounce anti-Semitism at college campus protests. He will be delivering the keynote address at the U.S. Holocaust Museum's Annual Day of Remembrance. That's at 11:30 a.m. in D.C. The speech underscores Biden's political dilemma, now 7 months into Israel's war in Gaza, that has exposed divisions within the Democratic Party that complicate his odds of winning in November. And we have yet another setback for Boeing, especially when it comes to confidence in the plane maker. But this time, it's space-related. The launch of its Starliner space capsule with astronauts on board has been delayed because they found something wrong with the valve on its rocket. Now, this valve was used to regulate pressure. Investigators now need to decide if it needs to be replaced. The next backup dates for liftoff are today, this Friday, or Saturday. Tesla CEO Elon Musk sat down with Michael Milken at the Milken Conference in LA. There he discussed a lot of different issues, from immigration to free speech, and then he honed on, as you might guess, threats posed to humanity by AI.
I mean, AI might be the most important question of all. The percentage of intelligence that is biological, grows smaller with each passing month. Eventually, the percentage of intelligence that is biological will be less than 1%.
Musk then went on to add that AI still has a long way to go before becoming a viable tool in space exploration. And that's your Bloomberg Brief. John.
Hey, Danny, thank you. Much more from Danny in about 30 minutes' time. Up next on the program, Israel pressing ahead in Gaza.
We've made clear our views about operations in Rafah that could potentially put more than 1 million innocent people at greater risk. We continue to believe that the hostage deal is the best way to avoid that sort of an outcome.
That conversation just around the corner, live from New York City this morning. Good morning.
Connection lost.
Always on the heartbeat of the tech
spread across global markets.
The real-time data aspect is going to be important.
We're going to bring you expert analysis on that. Sure.
Don't miss Bloomberg's interview with the
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Good morning. This is Bloomberg Surveillance.
This is Bloomberg Daybreak Europe.
You're watching The China Show.
This is Bloomberg Technology.
This is the countdown to the close.
Welcome to Balance of Power. This is Bloomberg.
Three-day winning streak on the S&P 500 could become four. We're just about positive by 0.03%. Quite a run in the bond market. Yields lower by about 4 days now. Could become day four. We're down by another 2 basis points on a session, Lisa. 446.92.
It's been sort of the 1-2 whammy punch, which is basically the Fed officials coming out and saying that their bias is to cutting, even with some of the hotter than expected prints. And then we got weaker than expected prints on a whole number of occasions, which is just feeding into what you've been talking about. How long before we flip it back to saying that we're going to get summer rate cuts because the threshold has been met? And that seems to be the path of travel.
It's happened so quickly. We had that big move, yields up, post-ECI, which was a week ago this morning. And then ever since then, it's just yields up, yields up, yields up, or rather yields down over the last 5 days.
Which goes to this idea that there's asymmetric risk and it's being priced out by a lot of people in the market.
Encouraged by what we saw in that downside surprise on payrolls on Friday. Under surveillance this morning, Israel pressing ahead in Gaza.
We want to get these hostages out. We want to get a ceasefire in place for 6 weeks. We want to increase humanitarian assistance. We've made clear our views about operations in Rafah that could potentially put more than 1 million innocent people at greater risk. We continue to believe that the hostage deal is the best way to avoid that sort of an outcome. I mean, my goodness, folks, I don't know that it gets any more sensitive than right now.
Here's the latest this morning. Israeli forces moving forward with their offensive into Rafah after turning down a ceasefire proposal from Hamas. Troops have taken control of the border crossing with Egypt after telling civilians to leave the area. Israel saying it still plans to send a delegation to meet with mediators in Cairo. Former senior U.S. intelligence official Norman Rule joins us now for more. Norman, wonderful to get your perspective. It always is, sir. Can you help describe what is on the table from Hamas to the Israelis and why this truce, this ceasefire proposal, has been turned down?
Good morning. Well, first, we must recognize this is very difficult and complicated diplomacy, and honor is due to all the diplomats who were involved, especially Director Burns. Hamas has, in essence, not approved the proposal by the Israelis, Qatar, and the United States, but it has offered a counter proposal. The counter proposal whittles down Israel's demands, already described as extraordinarily generous by Secretary Blinken. And in essence, Hamas is proposing that it release 3 prisoners a week for 6 weeks, and then 15 likely bodies of prisoners at the end. In return, it will receive about 50 Palestinian prisoners for each Israeli, 30 of which will be life sentences, which means the worst of terrorist crimes. And at the end, Hamas is claiming it will have a permanent ceasefire. The U.S. and others are saying a sustainable calm, which is much vaguer and allows room for diplomacy.
Norman, what do we know about the well-being of the hostages taken way back in October?
Their situation is serious. The likely number of deceased hostages, I fear, will be greater than many hope. And one thing Hamas has also reneged on is it has refused to provide a list of the living and dead hostages, which comes as quite a blow to the families of hostages in Israel. The stories of how female hostages have been treated have been very dark.
Norm, this morning, the New York Times is reporting that CIA Director Bill Burns was consulted on the these changes to this agreement that Hamas says that they would sign up for. And they say that the proposal uses the term, quote, sustainable calm, wording that Israel had agreed to but doesn't anymore. Can you give any insight on why that term is so difficult at the moment?
Well, it comes down to interpretation, and the interpretation includes a public narrative. So sustainable calm does not mean an end to the conflict. And keep in mind, for Israel, the eradication of Hamas as a military force remains their ultimate goal. Hamas is claiming it's an end to the conflict. It means Israel is withdrawn from Gaza, and it, in essence, is returned to power. We like the phrase, the West, because it provides room for negotiation. I think the problem is that the interpretation that it means the end of the war and the survival of Hamas will harden Israeli views on that language.
Now that we know that Israel has taken control of this Rafah crossing, we heard yesterday from the State Department, and the spokesperson yesterday talked about the fact that the U.S. had put proposals on the table for Israel to go into Rafah. Is it your understanding that potentially the Israeli government is using one of those proposals that the U.S. had basically green-lighted?
Well, to be clear, we have three things underway. The Israelis have undertaken clearing operations that could enable a Rafah operation. That doesn't mean the Rafah operation will take place. It could be overtaken by diplomacy. But in essence, they've begun airstrikes within Rafah itself, supported by intelligence, where they've taken out militants, military targets, a car bomb. That's something that the United States had reportedly endorsed. The Israelis are also talking about moving about 100,000 Palestinian refugees about 7 miles away into safe areas with field hospitals, housing, food. That's, again, something the United States has requested. And last, the Rafah crossing is important for control because it contains tunnels that Hamas is using to bring weapons and militants inside. But here's a counterpoint. Rafah and Kerem Shalom are the two crossings by which food and fuel are brought into Gaza. Fuel is incredibly important, not only for trucks, but for desalination plants. So right now, Rafah is closed temporarily, and the Kerem Shalom crossing is closed because Hamas is firing rockets at it, in essence, to stop aid coming into Gaza. And indeed, there are reports that within the last hour, Hamas has fired, again, rockets at this site. So it's a very difficult situation for the refugees.
There's a broader question here, which is just how much control or how much influence does the U.S. administration have on Israel over its plans as it goes into Rafah and as it proceeds with this conflict? The Wall Street Journal had a report yesterday saying that the U.S. had delayed sending precision weapons to Israel in an effort to pressure them to delay the invasion of Rafah, or the blocking off of the entrance there. What do you make of that? I mean, how do we read that in terms of influence from the U.S. to Israel?
The National Security Council spokesman refused to corroborate that report, but likewise, he didn't deny it either. And logistics is probably the most constraining element we have in U.S. policy towards Israel. But we shouldn't overstate our level of control. The Israelis suffered 1,200 dead. They have personnel fighting what they believe to be a war for the survival of Israel in Gaza. There will not be a tremendous enthusiasm for allowing Hamas to remain in power. Now, the reverse of this is there is very little pressure on Hamas. You hear very little from the West or other countries saying that Hamas must surrender, Hamas must leave country, Hamas must stop fighting behind civilians. So the Israeli position is the pressure is all on their side.
Norman, we appreciate your insights, sir. Thank you. Former senior intelligence official Norman Rule. The pleading of the release of hostages seems to have just sort of faded away on the international scene, on the international stage over the last several months, I would say, Lisa, and Israel at the moment risks losing even more support on the international stage based on this recent effort. I don't know what the future is, but you go any further into Rafah and certainly it's going to go in that direction.
We were talking to John Lieber a couple of weeks ago, and he said that essentially some of the protests and the anger have only made Israel feel more isolated and say, if we don't fight for ourselves, well, who's going to fight for us? And that seems to be an increasing feeling.
I remember a quote from President Biden last October: while you feel that rage, don't be consumed by it. After 9/11, we were enraged in the United States. While we sought justice and got justice, we also made mistakes. I was thinking of that just yesterday. Up next on the program, we should get some numbers from Disney, from New York. This is Bloomberg.
You're a famous photographer, you're a conservationist, you're an activist. How would you define yourself?
I think I'm just a human trying to figure out how to be a better steward of our little planet. I am a biochemical engineer by training. I studied marine biology, fisheries, aquaculture, and then I realized that the ocean is very much out of sight and it needs help. And so I became a photographer to be able to communicate with a larger audience. And thank goodness I was good at it.
When did you realize that actually photography was your passion and you could make a real difference to our world?
You know, I didn't start out as being a photographer, so it was not until 1990-something, 96, when I picked up a camera. And I became a professional photographer soon after. And it's one of those things that it's like learning another language. You learn a few words, and then you put a few sentences together, and one day, you might be able to write poetry.
This is Bloomberg News Now.
News when you want it at the touch of a button.
Another volatile day on Wall Street. We're seeing big moves.
All eyes on Capitol Hill as Democrats and Republicans prepare.
Today's job numbers casting doubt on the Fed's next move. Inflation remains front and center. And that's news when you want it with Bloomberg News Now. Get it 24/7 on the Bloomberg Business app, Bloomberg.com, and anywhere you get your podcasts.
Bloomberg News Now. Context changes everything.
Three days of gains on the S&P 500 coming into Tuesday. The S&P 500, futures at least, positive by 0.04%, up 3% over that period, so decent run, best three-day run of the year so far. The Nasdaq over the same period, up about 4%. Small caps have been nicely as well, added some more weight to that rally, up by a third of 1% on the Russell this morning. In the bond market, yields lower for 5 consecutive sessions on a 10-year. We're down another 2 basis points. We have seen a 21 basis point move over that period. We're down to about 446.71. We're down 2 basis points on the session. Just getting some earnings for you. It's Disney. Let's get straight to it. Second quarter EPS 121, the estimate 112. That's an upside surprise. And looking forward from here, they now see the full year adjusted EPS growth target of 25%. So, Lisa, that at first look looks okay. The stock in the pre-market's down about 0.7%.
Well, here's the why, maybe. You can see that their subscribers to Disney Plus for the second quarter came in lighter than expected. You could see that revenue came in slightly lighter than expected, which raises the question, how much is the increase in earnings per share going to be from cost efficiencies, from sales of particular units? Exactly how are they going to raise this at a time where you're not really seeing massive growth in any of their units?
We'll catch up with Hugh Johnston, the CFO of Disney, in about 35 minutes' time. I find the battle over Hulu to be absolutely fascinating. I mean, I call it a battle. Ultimately, we've got to agree on a price. And this is what we understand so far. So JP Morgan has valued Hulu for Disney at close to $27.5 billion. Morgan Stanley's valued Hulu for Comcast at more than $40 billion. That's according to Reuters reporting just yesterday. We need to work out what that 33% stake is worth so we can close this deal and move on.
Is it just a matter of distribution? Is it a matter of who can potentially grow it more? How do you get this to sort of come to the table? And do they have a sense of that? Are they going to talk about that today? Which is the reason maybe why they have such optimism that they can increase their EPS growth target by 25%.
For the 20th time on this program, the Hulu subscription worth every penny for Shogun over the last 2 months.
Okay, you've been pushing this.
Done. Yes, I have been.
Do you have to have like a spot on this every single day?
Shogun.
Yeah, for the next 3 weeks.
I was so happy when we did the Fed show last week and TK just started talking about Taranaga-san. And I was like, you've watched it too.
Honestly, you guys both have been paid off. He walked in, he was like,
paid off by
you
me.
have to watch Shogun.
That is an unacceptable accusation for a journalist such as myself. How dare you?
I didn't have time for this.
Let's turn to foreign exchange.
And the Shogun I will watch.
Let's get to the euro. Some exclusive coverage by Christine Lagarde. Yes, the euro right now against the dollar looks a little something like this. Let's get it up for you. The euro at the moment against the dollar is a little bit weaker. We're down by about 0.06%. Looking at dollar yen as well, 154.61. It's the scarf, MH. It's the scarf.
Oh, you know, she's a fashion icon in the finance world, so I'll take it as a compliment.
You're an icon too. You're an icon as well. Under surveillance this morning, Israeli troops taking control of the Rafah border crossing in Gaza. You got something to say. The move is the first of its kind since the war with Hamas began back in October. President Biden speaking to Israeli Prime Minister Benjamin Netanyahu just yesterday, warning against an offense. Elsewhere, Boeing in the spotlight of regulators once again. The FAA investigating incomplete inspections of the 787 Dreamliner. This includes suspicions workers may have falsified records to cover up short job cuts at a factory in South Carolina. Boeing saying there is no immediate flight safety issue. Bramo, once again, every single time any news comes out about this company, it is not good.
There just is this really question mark around when we're going to get a floor, when we'll get a sense of a washout, when we'll get something from the authorities saying, okay, we understand what happened and we're done here. The fact that the FAA is embarking on a new investigation at a time where they've already had a gazillion other investigations, are they on top of things yet? That's my question.
This goes back to the point originally that the FAA had, which is that a lot of the work that's being done on the manufacturing floor is actually not getting up to the C-suite. And there's a huge disconnect from the individuals that are going through the safety precautions of these planes, building these planes, and the people leading the company.
Later on this morning at about 2 hours' time, 8:45, don't miss our conversation with Sheila Kaiolu, the equity research analyst at Jefferies, on Boeing and the latest difficulties. Let's finish this roundup with UBS returning to profit after the rescue of Credit Suisse. The move reverses 2 loss-making quarters thanks to gains from investment banking and wealth management as well.
Actually, it's a good momentum. You may remember in the fourth quarter, we also had a very strong performance in banking. As we integrate the new colleagues from Credit Suisse on our platform, we start to see the pipeline developing. We are able to execute. And so it's very much aligned with our expectations of improving the mix between our markets business and our banking business in the investment bank.
Joining us now to discuss is Bloomberg's Jan-Patrick Barnett. Fantastic exchange between Sergio Adamati and Francine Lacqua. Jan, what stood out for you?
Well, I would say like the report as a whole, it was really like a great quarter for UBS and what they are doing. So you have operational profitability returning to the bank, which shows like the integration is working. They are on track with their plans when it comes to integrating Credit Suisse, and it seems there are no big like wobbles that are holding them back. And then you have the non-core unit where they wind down the stuff that they inherited from Credit Suisse there as well. They made some profits, so it looks like it's not like the minefield that some shareholders have maybe like feared about, that this could happen with all the assets on the balance sheet of former Credit Suisse. So that's very good. And then the outlook is also not too bad for the bank. And all around, I would say like they're doing everything that they need to do. They are on track with the merger, which is like the most important thing. They're communicating clearly what they're doing, where the obstacles are. There are a few things that are uncertain, especially when it comes to capital. But overall, I think like UBS is doing that. What Credit Suisse always failed to do is like communicating clearly, executing on the plan, not over-promising, and just doing the right thing at the right time.
Nobody wants to see layoffs, Jan. Certainly not in this industry. It's a close-knit community. But can you tell us whether we've worked through all the layoffs off the back of this combination?
Well, I mean, like, I guess there's still a lot of things to come as they work out, like, what they want to keep and how they want to structure the new business. I would argue that they're probably, like, halfway through this thing. And, of course, as you said, like, layoffs are never a good thing. But, of course, if you merge these two massive banks, you will have overhang and you will need to reduce the headcount. We know that UBS has put out a big promise in reducing the costs. And we always know that the headcount is a big topic of that. So they still need to work through this. Yeah, I mean, like if you want to have a sustainable lender of that size, then you need to have costs in check. And that unfortunately also means to have some job losses.
Yeah, and how much are we looking at increasing regulation that, yes, UBS is arguing against, but could seriously crimp their forward-looking profits just simply because they're the only game in town for a nation?
Yeah, absolutely. And it was kind of funny, so to speak, on the analyst call, because there was question after question on capital and regulation. And Sergio Adamati was like very stoic in saying like, no comment, it's too early to discuss the matter. And I understand UBS's point of view that they say like, we are not like super dominant in Switzerland. There are plenty of other banks, and that like capital and regulation never was the issue of Credit Suisse in the first place, but it was like more a loss of trust. And to be fair, I guess you can like capitalize a bank as much as you want. If you lose trust and if you lose liquidity and deposits, then you can have as much capital as you want. It will never save you. So that's the line of argument of UBS doing, I guess, like also when they talk to the regulator and to politics. On the other hand, I totally understand Switzerland. Taxpayer money was once again involved in that rescue. So they have to tighten the rules somewhat to say like, it can't be always the same way that like when something goes wrong that the taxpayer has to step in, at least like on an immediate basis. So It's still a topic that is like probably the biggest uncertainty for UBS going forward, and I understand that they don't want to comment on it at this point, and I guess like people are fine with that. But coming months, I guess we need some more clarity from the regulator itself, but also from UBS, like how they want to handle the matter, because otherwise shareholders are not going to be happy with that uncertainty going forward.
I love how you describe the Swiss CEO as being stoic. Who would have thunk it? I wonder if you could look going forward about any areas he's not stoic about in terms of areas of growth. You talked about U.S. There's a lot of question marks around Asia. Where is the growth going to come from?
Well, it's definitely not coming from Europe, as he pointed out. He's happy like with the Switzerland business, but he was very clear that growth is coming from Asia and from the US, that these are the two areas the bank is focusing on. And it was very interesting, again, when he talked about like capital and regulation, that he was like, shrinking the bank back to greatness is not the way going forward for him. So he wants to grow the business. And with this quarter, he actually showed us that he is able to do that. Deposits were growing, inflows were great, wealth management is doing great, the investment bank is okay. We know it's a seasonal business and pretty volatile, but overall the operational business of UBS is doing okay. And we even saw like some growth coming from the former Credit Suisse entities. So overall, I would say like operational, the bank is on a good path, and it just need to keep on doing that, and yeah, then shareholders will probably be pretty happy with that.
Jan, when it comes to Credit Suisse clients and merging them onto UBS platforms, what's the timeline for that?
Well, I mean, like they still want to complete like the merger of the legal entities in the coming weeks. So that's the first important step that they have to do. Also to like continue the share buyback that they have announced. And then like by the end of the year, we will be roughly halfway through the whole merger. And I guess like the further we move down the timeline, the clearer Credit Suisse can be on what they want to do. Today in the report, they told us that they have closed 35% of the books in the legacy unit. They have decommissioned 15% of the IT infrastructure of former Credit Suisse. So it shows you there's still like some way to go, but they are on track, and that's the most important thing. They are ticking those boxes, and they're ticking those milestones that they have laid out roughly a year ago. And I guess that's all the market cares about for the moment, that they stick to their plan, that this plan is executed extremely well. I mean, like I guess like the whole thing could act as a blueprint for further mergers, not like in terms of the technical thing, but on how you communicate to the market, how you exercise on your plan, that you're not over-promising, but be very firm and very clear on what you're doing and when you're doing. We said this before, it's just like, I think like bringing back Armotti as a CEO, a perfect step, really well done. And that's why the share price is so strong today, even though the numbers are not like 100% supporting that, but it's just like the bank is doing the right thing in communicating and exercising on its plans.
Up big time in Swiss trading. Great to catch up, Jan. As always, Jan-Patrick Barnett there of UBS, up by close to 10% in the pre-market. Smaller move in the pre-market for the Walt Disney Company. That is negative by 0.4%. Coming into this earnings release, the stock was up by 29% this year through Monday. So pulling back just a touch by, let's call it 1 full percentage point. If you are just joining us, welcome to the program, and here are the numbers. 121 EPS, Lisa, against an estimate of 112. Profit climbing 12% at the division that includes theme parks, and losses for streaming narrower than expected.
Basically, this is a company that's been bolstered by raising prices on people who are Disney World fanatics and who want to go there, Disneyland, etc. The Experience Place was, they were able to cash in much more significantly. There were some bright spots, there were some weaker spots in the streaming business. Cricket, evidently, there were some concerns about increased costs around cricket airing. I know, Anne-Marie, you were really following that, but there's this question of, you know, what they're going to do to increase their earnings by 20 to 25% without some sort of more material shift in their business strategy.
Also, they took in more than $2 billion in charges due to goodwill impairments related to Star India and Entertainment Linear Networks, potentially why the stock is a little bit lower this morning.
I tried to talk about cricket.
Yeah.
Because you know how that went? Do you know how this went? And Marie said it sounded really like I was talking about Quidditch.
Yeah. No, if we're really going to do this again.
Yeah.
Anyway, that was actually included in their earnings.
Okay.
So, you know, you can follow that a little closer.
Good stuff. All right, much more on Disney a little bit later. Let's give an update on stories elsewhere. Here is your Bloomberg Brief with Danny Berger. Hey, Danny.
Hey, John. Scores of pro-Palestinian protesters were blocked by the police from getting close to the Met Gala. Demonstrators were heading towards the venue, the Metropolitan Museum of Art, when they were intercepted by the NYPD. A group of them had tried skirting the police by going via Central Park, but were met with barricades and threats of arrest. Some other earnings for you. Let's get you a quick check on Palantir, down 10%. The bar was perhaps high for them, given it's been one of the market's AI darlings with a 47% year-to-date gain. Yet it's slightly above estimated forecast failed to impress. Analysts at William Blair said the stock was down so much, likely because of a sharp slowdown in U.S. commercial revenue growth, something crucial to its AI push. Now, Apple is developing a homegrown chip to run AI tools in data centers. That's according to the report from the Wall Street Journal. It will build on previous efforts to make in-house chips, which runs on its devices, according to the journal, which cited unidentified people familiar with the matter. Perhaps the best part of this is the code name for the project internally, ACDC, which of course stands for Apple Chips in Data Centers. Later today, Apple is also hosting an event announcing major upgrades to its iPads. That's your Bloomberg Brief, John.
Hey, Danny, thank you. We'll catch up with Danny again in about 30 minutes' time. Hold on. People actually play Quidditch. Are you serious? Like they dress up?
Yeah. And like they
fly around on fake brooms.
Well,
Do they really?
They don't actually fly, because we can't fly on brooms, actually. But
isn't that just lacrosse?
Isn't that just cricket?
Isn't that lacrosse?
Honestly, I'm not an expert at real-life Quidditch, but I do think that people have a broom between
There's going to be some lacrosse players who are watching this like, how dare you describe our
Send your
sport as
email to Emery.
Quidditch. Up next on the program, the Fed urging patience.
Really want to make sure we're looking at the broad picture as the data come in. Hopefully we'll be moving in the direction we want to see, both on inflation and in terms of restoring balance to the economy, and then we'll make our decisions based on that.
That conversation coming up shortly. People get very passionate about lacrosse. You notice that?
Okay.
Like 55-year-old men still going around with a T-shirt.
Can I just say?
Where they played lacrosse at college.
I also
like
played lacrosse. Can I just say
35 years ago.
Quidditch that's played in real life is called Muggle Quidditch.
Oh, right, of course.
Yeah.
Because you're a muggle.
Correct.
Of course. And what am I, a wizard? Let's move on. From New York, this is Bloomberg.
The names that move markets are on Bloomberg.
How worried are you about the U.S. election? It's for the American people to decide what they want with their politics, with their government, with their future. But obviously, we are all concerned about it because the United States is the largest economy, the largest defense country in the world, and has been a beacon of democracy with all its upside and downside. We cannot interfere with their choice. It's their choice, and that's the beauty of democracy. But we have to be extremely attentive and anticipate, just as we do with inflation. You know, we do scenarios. What if, what if, what if? Then what do we do? Where I sit now in Frankfurt, head of the ECB, I think that we have to be strong as Europeans and not assume that we can rely on whoever our friends are around the world, because these things change over the course of time, as we have seen.
Bloomberg. Context changes everything. It's the world's second largest economy with a growing influence in global affairs. But geopolitical uncertainties, deflationary pressures, and questions about foreign investment linger. Bloomberg, the China Show, brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China. Bloomberg, the China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
Equities on the S&P 500. Bramo's lost it. Positive by 0.04%.
You're a wizard.
Just a little bit higher. You meant Ari. All right. Anyway, down about 2-3 basis points on a 10-year. 446 on a 10-year this morning. We're down for 5 consecutive sessions over that period. A move lower of more than 20 basis points. Encouraged by Chairman Powell. And, of course, encouraged by the data as well. Under surveillance this morning, the Fed urging patience.
Really want to make sure we're looking at the broad picture. We have the maximum employment and price stability goals. So we want to, from my perspective, see all the data and information that speaks to all of that. And really, as the data, come in, hopefully we'll be moving in the direction we want to see, both on inflation and in terms of restoring balance to the economy. And then we'll make our decisions based on that.
Here's the latest. New York Fed President John Williams saying there will eventually be rate cuts, and Richmond Fed President Tom Barkin suggesting the full impact of high rates is yet to come. More Fed speak on deck today with Minneapolis Fed President Neil Kashkari, followed by Jefferson, Collins and Cook tomorrow. Simon French of Panmure Gordon joins us now for more. Simon, wonderful to get you on the programme to get your views on the recent Fed speak. Walk me through your base case and whether it's changed after payrolls on Friday.
Look, Jonathan, nothing's changed in terms of base case expectation that we get a first rate cut in September. I think you can make the argument that the market overinterpreted the weakness of the earnings data. We know the payroll, the sort of wage inflation picture is one of those key data points the Fed is thinking about. But I think actually when you're talking about the broader market narrative, there needs to be progress on those headline indicators on CPI inflation and PCE inflation that have just stalled for 6 months. I think the Fed communication in the minutes was the last big market moving guide that they just don't see that threshold of evidence across their core price indices of making sufficient progress to do any cuts over the summer months.
Simon, I just want to pick up on something you said, that maybe we're putting too much weight on the wage growth figure. Can you just explain why that might be the case?
Well, look, you've got a lot of base effects at the moment that are perhaps being overinterpreted to those people who've placed too much weight, if you like, on the tightness or otherwise of the US labour market as a driver of wage prices. I think those models that, by the way, didn't work particularly well pre the COVID pandemic and pre the inflation surge, haven't worked particularly well at understanding nominal wage awards around most of the developed world, including the US economy. And therefore, what I'm saying here is you would naturally expect a falling of the nominal increase in wages to tack on to the fall in energy prices and, if you like, the supply side element of price growth. It's no real reading, if you like, of the underlying tightness or capacity or indeed weakening of jobs demand in the US economy. I thought that was the misinterpretation that we saw at the back end of last week.
Perhaps one of the reasons why the market is pricing in an increasing number of rate cuts all at once is sort of this flipping and flopping that we've seen in narrative shift all year, is because there's a feeling that when you start to see a little bit of weakening in some of the labor data, it'll happen all at once. We've heard this from Citigroup, we've heard this from a whole host of people. Do you adhere to that type of idea?
I don't think that's the way economies work. I think it's the way markets work. I don't think it's the way economies work. And this is why, if you like, the battle this year for narratives, and I think it's a really nice way of describing it, has been from those who look at previous cycles, which is, it's perhaps like one of those fast-moving consumer goods. I think it was Pringles. When you pop, you can't stop. When you're the Federal Reserve, once you start cutting rates, can you stop? And the market's, if you like, not convinced that while everybody is talking in the central bank community about a very gradual easing cycle, actually you look back at previous episodes, you're going, well, that's not revealed behavior. Once you start this exercise, you really have to keep going. And that's one of the reasons why I think we've had this tug of war all year between a narrative that takes historic revealed behavior versus those who are actually looking at the real-time data and going, actually, it doesn't justify a fast easing cycle from the Fed or indeed any of the major central banks.
So central banks need a rebranding effort, and maybe we can go to the Pringles people and say, can we just rejigger this to, you can pop and then let it get stale after taking one Pringle out, letting it sit. How much are we seeing that sort of the message coming from the likes of Tom Barkin saying that high rates are going to take their toll, et cetera? How much is that kind of what Fed officials are trying to communicate? Or is it basically that they also think that they're going to have to cut rates pretty aggressively and they're not going to really get behind this higher for longer narrative and don't have conviction behind it?
Look, while this isn't explicit forward guidance, it's financial conditions management, isn't it? And we've spoken on previous shows, actually, I think for most of the last 18 months, about the credibility of that message being absolutely key to the degree to which you don't have to follow through with a policy move that the market will have indigestion about, whether that is the speculation around a further hike to interest rates or whether that is actually the credibility of your message of an easing cycle. If you can get that message across and say, actually, revealed behavior of previous cycles may not be the guide you think it is, even though it populates all of your behavioral response models. That's a really important characteristic of Fed speak this week, next week, all the way going through the summer. And actually the ability to, if you like, ascribe credibility to that message versus what is actually trying to avoid the difficult position you don't want to be in as a policymaker. I think that's the real skill in these markets.
In the meantime, the second and third tiered central banks are meeting and discussing, as John would call them, not me, he calls them this. Today, earlier this morning, we got the Riksbank of Sweden. They did not actually cut rates. They were expected to. They held rates firm. On Thursday, we get the Bank of England decision. How much do you expect some sort of pushback from some of these central banks, not because conditions warrant it, but because the Fed hasn't given the green light, and basically they need that?
Look, I wrote in my notes this morning, in 1984, ahead of the Plaza Accord, it was the US dollar, our currency, your problem. Today, 40 years on, it's our currency, our debt, our demand, your problem. And I think that's symptomatic in what we heard from the Riksbank, what we'll hear from the ECB, and later in the week from the Bank of England, is how much currency weakness do you want to absorb into your domestic economy? You only need to look at events in Japan to recognize there is a potential path here where you start to have quite damaging currency weakness, perhaps not in terms of Japan imported inflation risk, but further up the, if you like, those second and third tier banks that Jonathan refers to. You do have real concerns, maybe not spoken about publicly, but certainly privately, about currency weakness generating a second round of inflationary effects that you really don't want.
Simon, you're one of the best. Appreciate it.